few years, right?
Yeah.
That's what they want. The trouble is we want everything now.
Which is the reason why, and if you go now, it changes the behavior later in the year. If we see an ongoing return to sort of frothier conditions, or perhaps the buying the dip kind of mentality, where would you take the 10-year projection for the end of the year if it is currently now 2.5%?
Yeah, I don't think it's going to be quite so binary. I'm sorry if I'm complicating this, but I think it's important to understand. If they hike with their eyes closed and they carry on doing it into next year, then the 10-year Treasury should be 4%, right? If they take into account that we could have a recession by 2024, they're going to be back at zero within the next year or so. Therefore, the yield should be below 1%. So the trouble is that the 2.5 sits right in between those two yields. Now, the human brain isn't clever enough to cope with that, unfortunately, because we want it all in simple terms. We want a simple base case. We want a path. Everything.
So what do you do with that as someone who has to give projections and forecasts?
That's how markets work, though. Markets are trying to incorporate all available information. It's not like they're going to jump suddenly from being hawkish to dovish. There's a transition that's gradual over time. And so, of course, the growth risks are growing. The inflation risks are maybe peaking. So it's happening gradually.
We do our research here at Surveillance, and one thing that's really important is to understand the last time we had a bond bear market this bad, West Ham was looking at relegation. They had a goalkeeper, Phil Parks, they hired for more money than God. There was 78, 79, and now there's now. Have you seen a bond bear market price down like we see right now?
Well, this year's decline in bond prices, so the total return, the losses this year have been the biggest on record for 40-odd years. We've had 2 consecutive years like this. It's also, I think, the first time since 1994 when both bonds and stocks have gone down. Now, this is important because it's not just a bond bear market you're talking about. You're talking about a stock bear market and questioning the whole role of 60-40. My view on this is that bonds have repriced sufficiently. And when we study things like these drawdowns and the move in the forwards, etc., I think bonds are offering much more value to diversify in a equity bond portfolio now than before.
I want you to speak to people that could care less about the forward market. Page 14 of your 28-page mid-year outlook. They're in some form of fixed income. They're down 3 years coupon, and they're saying, how do I regroup? What is the thought process in a bond bear market to try to catch up?
You won't get it back this year. And that's how you have to think in bonds. It's a slow grind. Bonds aren't about all of the rock and roll that you get in equities and in tech stocks and Bitcoin, etc. They're not the same, right? So bonds are there to be ballast in the portfolio. So Tom, you have to accept it's a down year. But you enter now with fresh cash. And you're getting 3% in the longer end. That's what people have been doing. And if you look in IG credit, you're talking about 5%, 6%.
Yeah, but how many of those buyers who are coming in were from Japan? How many were from China? And I say this because actually on a currency hedged basis, you can get more, or you actually can get less in the United States right now than in Japan.
They won't be coming from Japan because the Japanese curve is steep in the 10-year.
Does that matter?
Well, it means that their own market works better. Right, so that it means that the hedge doesn't work. They're better off being at home. Yeah, so that's true. Money might be coming from other parts of the world. I mean, you mentioned China. China seems to be slowing down. The question is there a capital flow from that part of the world into the US? Well, it's difficult because the capital account is locked down. But something seems to be happening. So if China is slowing down, then that's important to the Fed as well.
Okay, we don't care what you think about fixed income. The reason we had Steve Major in, excuse me, Lisa cares. I don't give a damn.
One of the preeminent minds in fixed income.
Also in full English breakfast. Steve Major, would you explain this? I mean, you grew up with this. Do people really eat this in England?
Not if you want to live a long time. So the
tradition of this in the Major childhood. What was the tradition?
We didn't eat that stuff. My father may have done, but the thing is it's not good for you. You need to stick to the
Do we blame this on Churchill? I mean, is this like out of some movie? You know, out of 1946 with Winston with a cigar in his mouth and the third glass of scotch at 7 a.m.?
Yeah, I like your comments about the eggs, though. The fact that they're yellow, that's because they are proper eggs. So whatever you're eating in the States,
Well, they're
I don't
orange.
know. But they're the right color for, but they're organic.
You know, he says proper eggs, and I miss John so much.
So you don't
He abandoned us
you
because
don't
he was
get organic
embarrassed.
eggs.
We get
have
organic
eggs, but I must admit, the vitality of the food here, in Europe in general, I think the best food's in Istanbul. In my travels.
I guess you're going to have to take us.
We're
on a
road trip in Istanbul. When they close the Bosphorus, it'll be a reason to go. Stephen Major, thank you so much for the energy to come in to Queen Victoria Street in a briefing here. I'm not having a full English tomorrow. What we're going to do is a full English data check right now. We can do that, Lisa. And I'm sorry, the headline number for me with Christian Malik coming up from JP Morgan is Brent crude 116.85 with a 117 handle an hour ago.
Yeah, where does this go? And frankly, what does this mean for some of the refined products? Especially, I'm also curious to know how the windfall tax plays into this in terms of whether this is just the beginning of a whole host of taxes that are placed around the world on oil companies. Yeah, exactly. So what's going to be the consequence? Will you see more investment in oil and gas production, or will you just see basically loopholes and frankly a retracement because there's going to be a somewhat of a resentment among some of the oil and gas companies? You just wonder.
I tried to pay for my full English in crypto, and they wouldn't take it over at the net. I mean, 28,874. It's been a grim week for crypto.
Yeah, how much of your assets do you have of the triple leveraged?
I have less than Scott Meinert. He was there, and he says up to 400,000, and then that news he made in Davos on an 8,000 on crypto. That's a bold call.
It hasn't been the safe asset that a lot of people had expected. I gotta say, I think you should start the triple leverage all crypto fund.
No, we tried that.
With the goat farm. I think it will go well.
We tried that. Coming up, Alina Polikova, President and Chief Executive Officer of the Center for European Policy, of course, on Ukraine. From a beautiful London, stay with us on radio and television. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. Boris Johnson pulled no punches when Bloomberg asked about the prospect of negotiating with Vladimir Putin. The British Prime Minister responded, "How can you deal with a crocodile when it's in the middle of eating your left leg?" Johnson said that the Russian president is completely not to be trusted. A record volume of Russian oil is on tankers and unprecedented amounts are heading to India and China. Asia overtook Europe as the largest buyer of Russian oil for the first time last month. Other nations have restricted Russian oil and gas imports. And for the first time in 2 years, profits at Chinese industrial firms declined last month. Industrial profits fell 8.5% in April from a year earlier. COVID outbreaks and lockdowns disrupted factory production, transport, logistics, and sales. And it's a heartening development for the Federal Reserve, but maybe not for American workers. Staffing firms say that companies are now becoming more cautious after handing out hefty salary increases over the last year. Economists expect data to show annual wage growth this month was 5.2%. That's down from 5.5% in April. The Fed sees wage growth as a big source of inflation. Texas Governor Greg Abbott reportedly has dropped plans to address the National Rifle Association's annual meeting in person today. The NRA is meeting in Houston just days after the school massacre in Uvalde, Texas. According to the Dallas Morning News, Abbott will be in Uvalde. He'll deliver a taped message to the NRA instead. Former President Trump will deliver his speech in person. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Europe, finally, they're changing their tone. You know, they need a stronger euro to bring down inflation, but they need to realize this actually strengthens consumer sentiment as well. I think the euro will find a new range, a higher range, but still, even with a higher range right now, it's still going to be very, very much undervalued.
Jeffrey Yu of BNY Mellon, his paper this week is the most controversial securities research on global Wall Street. Go to BNY Mellon, and Dr. Yu will tell you why you need to care about the Plaza Accord. He aggressively pushes against the zeitgeist that says, forget about the early 1980s, it's not a proper analog. And Jeff Yu says, no. We welcome all of you to London on our way back from Switzerland. We will be in New York Monday. Did you know we're not working Monday?
I've been trying to tell you that, and you keep saying you're going to get into the office anyway. Yeah. So I guess that Tom Keene will be in the studio saying, hello?
Well, I'm going to be there, and the only ones who can be with me is vet bills, so we'll be looking for that on Monday. Tuesday, we'll start out. I believe there's been a Pharaoh sighting, and he may be with us on Tuesday as well. Right now, on Ukraine, someone that's given us wonderful perspective. Alina Polikova joins us right now, president of the Center for European Policy Analysis. And Alina, you and I have the honor of speaking after good treatment by Sir Lawrence Friedman of King's College on war and on the uniqueness of Ukraine. Friedman is focused on the Black Sea. Are you?
Absolutely. You know, for years, I and SIPA, the organization I lead, have really raised the alarm bells about how critical the Black Sea is for regional security. Of course, we're seeing that today. Russia's blockade of the Black Sea is raising food prices across the world and is already contributing to huge food insecurities and crises. And this is really the reason why the Black Sea should have been an area of focus for a long time.
Does the Russian Navy have enough control to control the Black Sea, to control food? And if they do, how does NATO, and for that matter, Turkey, respond?
Well, they certainly have enough control to block Ukraine from sending any sort of grain, corn, exports of any kind outside of Ukraine. I mean, they're holding Ukraine hostage, and they're holding the world's food supply hostage right now. And so the Russians have said, look, you know, if you remove sanctions, we might let some of these ships go through, which is, of course, you know, terrorist-style tactics. In the Black Sea, Turkey is really the other main actor, and Turkey is, of course, a NATO member state. Unfortunately, at this point, without a direct confrontation with the Russian Navy, it's hard to see how we get that blockade off. So Russia right now does have essentially dominance over the Black Sea to control the passage of ships, to control basically global trade.
What's the red line here, Alina? How does this look by year end if there really is a problem with the lack of food in certain places?
You know, I think at some point NATO is going to have to act. Ukraine has a very low capacity in the Navy. They have very low capacity in the air as well. We've known that for a long time. Those are their main weaknesses. So at the end of the day, we have the right to enforce freedom of navigation. The Monroe Convention, which governs international Navy movements in the Black Sea, does specify that there should be freedom of navigation to international waters. Russia is obviously blatantly violating all of those rules right now, but threats aren't going to work. I think we need to see some real action, and we need to see some ships, NATO ships, UK ships, other ships, going through those waters to say, look, we're going to enforce freedom of navigation because that's the law. And if you want to have a confrontation over that, we're going to have to talk about it. But right now, it doesn't seem like there's an end in sight.
Alina, this is tiptoeing into a hot war between Western nations and Russia. At what point do we cross that line if there are ships from NATO that are sent to the Black Sea?
You know, I mean, this is the fog of war that we're currently in. There is an increasing risk of direct confrontation, certainly in the Black Sea. The battle over this very small uninhabited island called Snake Island is becoming this critical issue for the broader battle in Ukraine. You know, Russia has the huge advantage because, of course, it's controlled Crimea now for 8 years. And Crimea's strategic position has allowed it to project power across the entire waterways. You know, I think we have to think about what this means because, as you say, we're not just talking about Ukraine and we're not just talking about the Black Sea. We're really talking about global food supplies and food chains that are going to be affecting not just the most vulnerable countries, but also affecting, you know, Europe, the United States, all of us. And so I think we have to start thinking about what is the balance to be struck there. My preference, of course, is the Russians come to the table and we can engage in some diplomacy over this issue. But so far, they've shown very little interest in that.
Alina, I asked Sir Lawrence Friedman a question from the giant Thomas Schelling, of course, who did so much thinking about this across the arc of the post-World War II era. And I asked Thomas Schelling once simply, how do wars end? With all of your knowledge of how wars end, what do you guess to be the outcome of this war in Ukraine?
Well, wars in Europe of the 20th century have ended in a negotiated settlement after a defeat, a big military defeat. Look at World War I, look at World War II. So it's wrong to say that all wars end in some sort of negotiated agreement. That only happens after capitulation. And so at the end of the day, one side will have to lose. The Ukrainians, of course, said they'll fight to the last man standing. The Russians are making some progress, but increasingly this looks like it's going to be a very long grind that could last many years, in fact, without either side really admitting or really seeing themselves as the victor or the loser. You know, I think it's still in our interest to ensure that Russia loses this, because at the end of the day, that's the only way they'll come to the negotiating table. And that is what European history has shown us over and over again.
Alina, before we let you go, just quickly here, what role does oil play? And frankly, the idea of Europe limiting their imports of gas from Russia going to have on the duration of this conflict?
You know, all of these kinds of sanctions, particularly on oil, because we're not talking about gas here. Gas is the Achilles heel of the Russian war machine. You know, right now, the Russian government is maintaining its war effort in Ukraine primarily through energy payments that it's receiving. It's likely about to default in the next several months on some of its debt payments because of the United States' actions on sanctions. But on oil, you know, this is going to be a hit if Europe moves forward with this, but it's certainly not going to, you know, kind of buckle the Russian economy, because at the end of the day, what likely will happen is oil prices will go up. And that will, in the grand scheme of things, of course, benefit Russia as one of the largest oil energy exporters in the world. So it's a really mixed bag as to whether the European oil embargo, if it happens, will affect Russia in the short term. It may, in fact, in the long term, benefit it slightly from rising prices on oil.
Dr. Polikova, thank you so much. It's a wonderful briefing here on a Friday to get us into the weekend. Alina Polikova with the Center for European Policy Analysis. I really want to touch on the data here, the dynamic of a constructive week with futures up 15, Dow futures up 56, and the VIX, big deal, 30, angst, 40, big angst. We go the other way, 29, 28, to see a 26 VIX today would be a good way to end this week as well. The dollar, a little bit of weakness. Euro 106.99 from London. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
who are thinking the Fed's going to be too gentle here with the economy.
We need to differentiate what is a slowdown versus, so basically soft versus hard landing.
It seems like there's a lot of room for steam to come out of the economy before you start getting big cutbacks.
Inflation is high, but this is the first time in a couple of years where there are no restrictions.
Until we get a better sense on inflation and jobs, we're going to be fragile.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene from our studios in London today. Jonathan Farrow, not with us, recovering from a full English breakfast. We expect to see him on Tuesday as well. We are wrapping up a week here to get to the weekend, to get to the June mid-year outlooks, to get to the jobs report. We go back to America, to the key thing for Chairman Powell, which is the American labor economy.
And frankly, if what we got yesterday in terms of initial jobless claims is any indication,
pretty good.
The labor market is still incredibly strong. Is that a good thing or a bad thing? I mean, it's a great thing if people can get jobs and if they can get paid more, but it creates, again, another problem for a Fed that's trying to thread a needle that's really hard to thread.
I'll steal from Mohammed El-Arian. If you'd read your book, you'd know this. T decisions matter. How do you make a T decision that's like Robert Frost, The Road Not Taken?
Thank you. I appreciate
that. It's Matthew El-Arian doing his Robert Frost imitation. The T decisions now are impossible given the set of uncertainty.
Which is the reason why I find it fascinating that Fed Chair Jay Powell actually didn't capture as much attention when he came out and said, this is not going to be nuanced. We're not going to look at the specific drivers of inflation. We're going to just go at it because we need to get price stability. If that's the case, is it a good thing or a bad thing that you're seeing actually an easing in financial conditions this week and that you're seeing people actually expect less from the Fed as you start to get a slowdown priced into certain assets?
For those of you on radio, for me to turn to Lisa, I got to do, it's like Snaggle pushed years ago. Exit stage left. If I freeze in this position, can we still do the show?
I think so. I don't know.
My back is, it's like we're getting there.
Well, let me tell you what's going on.
Let's move forward here and try to brief
ourselves
into Friday, and particularly brief ourselves into next week.
Honestly, this data, I think, is understated this week. 8:30 a.m., we get U.S. personal income and spending, and I go back to Brian Moynihan of Bank of America coming out and saying the consumers actually were spending 10% more in the first 2 weeks of May than in the same period last year. That is an inflation-adjusted more than 1% of real spending more. How much do we see that play out at a time when you continue to see consumers have plenty of cash in their coffers? 10 a.m. we get U.S. University of Michigan sentiment survey for the month of May. It is expected to come in remaining around the lowest going back to 2011. Does this matter? A lot of people have basically said people are saying lots of gloomy things, but they're still going out and buying. And today we are doing Bloomberg surveillance from London. We are having tea in London, and we are also going to be speaking with Mohammed El-Arian coming up of Bloomberg Opinion, and of course the longtime member of PIMCO, longtime thinker who has incredible views on everything. Jordan Rochester of Nomura, he will give us his sense on the dollar. And Christian Malik of JP Morgan Securities, really interesting.
Malik's the interview of the day.
Well, it's such an important moment where you've got gasoline prices rising tremendously. You've got energy prices causing a personal consumption crisis in the UK. And you're dealing with how do we offset this at a time of an escalated conflict in Ukraine driven by Russia.
Let's bring this together. Jordan Rochester will join us here on this weaker sterling, weaker euro call. That's about dollar dynamics. Christian Malik will join us with that 100-page opus from JP Morgan on higher oil prices. That deals with the dollar. And right now, one of our great contributors to Bloomberg Surveillance, a gentleman at the University of Cambridge and Queen's College, and of course with all his work on the game theory of our global system, Mohammed El-Arian this morning. Dr. El-Arian, I loved your note because Jeff Yu of BNY Mellon agrees with you. It is front and center right now. As Folkert Landau of Deutsche Bank said on February 24th to us, the dollar matters, and a dollar too strong gets in the way of a recovery. Are we at a point where a resilient dollar is a problem?
First, welcome to you and Lisa to the UK, and thank you for bringing us good weather. It's wonderful to have you here. We are near the point where the dollar is too strong for the rest of the world. Not for the US, but for the rest of the world. It's this phenomenon I call little fires everywhere. And whether it is food prices or oil prices or strong dollar, that contributes to the little fires everywhere. The answer, by the way, is in the hands of the other countries, not the US. There isn't much the US can do about a strong currency, but there's lots that other countries can do.
The panel that I had yesterday in Davos, Dr. L. Aaron, included Sir Lawrence Friedman. And the most quiet moment in that too short an hour was where he linked dollar dynamics into our food crisis and into the memory of Tunisia, the Arab Spring. Our Eric Martin, as well, is focused on your Egypt. When you look at the fragility of Egypt and the memory of the Arab Spring, what is the model to help begin to solve the crisis?
It's a big issue. Kristalina Georgieva of the IMF months ago said a cost of living crisis in the West is the risk of famine in commodity importing developing countries. That's particularly true for fragile economies. For economies like Egypt, like Turkey, the decision is how much do you subsidize and how much do you pass on to the consumer. And food is a particularly delicate issue. Most countries will end up subsidizing, so you will unlikely to get a repeat of 2011. However, and this is important, you have to worry about the finances. This is a very difficult environment for commodity importing developing countries, Tom.
Mohammed, before we move on to what's going on in rates and how we move ahead in this economy, what do you think in terms of offsetting those costs of something like the windfall tax, as just was announced here in the United Kingdom?
You know, I've been arguing for a while that the right thing to do is to impose a windfall tax and to use the proceeds to protect the most vulnerable segments of the population. And that's what the UK did yesterday. Is the windfall tax perfect? Of course not. It's not a first best solution, but there are no first best solutions in this world anymore. It is by far superior to every other second best solution. And I think you're going to have more countries look at this as a temporary measure to protect the most vulnerable segments of the population.
Is it just going to be the oil and gas companies, Mohammed, or are we also going to be looking at potentially for coal companies and copper and all the other commodities, in addition to food producers?
I suspect we'll be focused on oil and gas. Going further than that gets really tricky very quickly. So I suspect it will be focused on oil and gas.
Moving forward, Mohammed, we were talking at Davos about how the banner headline was about the Ukrainian war, Russia's war in Ukraine. But really, under the surface, when you peeled back the onion, it was all about China and the fact that any kind of prolonged shutdown could torpedo global momentum. How closely are you watching that? If we do get the lockdowns continuing to year end, does that mean that we are going to be close to a global recession?
Yeah, I'm watching it very closely. Because what happens in China impacts both global aggregate demand and global aggregate supply. We forget that China is a major consumer of products also made elsewhere. We saw what the retail numbers looked like. They were pretty horrible. We also are reminded how important China still is in the supply chain. So I look at this very carefully. Lisa, the concern we have, and I know that you are very attuned to this, is that the three major areas of the global economy are slowing at the same time. And there is no compensating locomotive anywhere in the global economy right now. So we've got to be careful that we don't get the self-feeding process. And this is important because the marketplace has embraced the possibility of a pause in September. Be careful, because the only reason the Fed would pause is because demand has come down really fast. Right. And that's not going to be good for risk assets.
Mohammed, I want to go back to the only game in town. And folks, this is, you sit there and you go, well, why is this guy so visible? What is it so special about Alarian? And what he has done is articulate game theory across our economics, finance, and investment. And one of the nuances, Mohammed, of the only game in town is separating, and in this case, Chairman Powell's desirable from Chairman Powell's feasible. What is the feasible set right now for the American Central Bank?
I think, at best, the feasible set is what Chair Powell called a soft-ish landing. And the ish is really important. I think the time has passed for a soft landing. We could have done it, but that would have implied the Fed moving 9 months ago. It should have, it didn't. So instead of tightening into a growing and dynamic economy, it is tightening into a slowing economy. So it is very difficult to get a soft landing. So the best you can hope for right now is a softish landing. What's the probability of that happening? Not as high as I would like it to be. I think the Fed is going to have to decide between two policy mistakes. Hit the brakes too hard and risk a recession, or tap the brakes in a stop-go pattern, including pause in September would be an example of that, and risk having inflation well into 2023.
Dr. O'Leary, Olivier Blanchard was talking about Stan Fisher and said he was our great North Star, which is an extraordinary statement about the gentleman of 1998. We have a conceit now that our currencies are more floating. Can the release valve for Chairman Powell, as he approaches the feasible, be dollar dynamics because we have a more open, more floating currency system?
It's not open enough in the U.S. economy for that. Look, the solution to all our issue is a surge of productivity. If we get significant productivity growth, we can reconcile all sorts of difficult trade-offs. So the key issue is whether we get a surge in productivity, and you can get that with all sorts of things happening underneath. It would be wonderful, for example, to also have labor force participation go up, especially among women. That would help. It would be wonderful to have supply chains improving. That would help. Is all that going to happen in the short term? Very unlikely, unfortunately.
Mohammed, you're talking about how a softish landing is looking like the most best outcome, and it looks not that likely. Do you think that the recent data that we've seen, and frankly, the assumption in markets that momentum is waning and that the Fed's already getting what it wants, do you think that that's gotten ahead of itself? Or do you think that they're onto something, that there has been already a slowing that will make it easier for the Fed?
So I think the marketplace is going through two processes. One is a dip was overdue. We had 8 weeks of successive declines, and clearly there are people who are finding bargains, and there are single name bargains. And the fact that we've had the largest inflow into the equity markets globally for the last 10 weeks is significant. We are seeing dip buyers. So you have a very technical reaction after 8 straight weeks. That I totally understand. What I don't understand is the notion that suddenly the Fed will be able to hike twice and then take it easy and pause. The only reason, as I said earlier, that happens is if demand collapses. And if demand collapses, equities are not going to do well. You saw what happened when Target announced that they were being impacted not just on the cost side, but also on the revenue side because of high inflation. And the last thing this equity market needs right now is concerns about earnings.
Mohammed Al-Arian there with the idea of technological progress and productivity moving us forward. He is, of course, from the University of Cambridge. Lisa Abramowitz and Tom Keene from our studios in London. Futures, a daily lift up 12, Dow futures up 30. Stay with us, the VIX 27.20. Good morning on radio and television.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Rather than using its power to reinforce and revitalize the laws, the agreements, the principles, the institutions that enabled its success so that other countries can benefit from them too, Beijing is undermining them. Under President Xi, the ruling Chinese Communist Party has become more repressive at home and more aggressive abroad.
On a May afternoon, the Secretary of State of the United States with a strategic statement by the Biden administration on China. Widely anticipated, it will be digested, of course, in Beijing as well. The immovable force in the calendar for the Secretary of State are the Chinese meetings in later autumn as well. This is normally what we would digress to here in London with our Jack Fitzpatrick in Washington, but this is a different Friday. Jack, Lisa and I are out of touch with the agony across America today, and it centers on the National Rifle Association. The history of the NRA is young boys out in the woods with a single-shot Remington shooting squirrels. The modern reality is quite different. What will the reality be at the NRA meetings in Texas?
It's going to be interesting to watch exactly what the reality is, because the shooting in Uvalde has required a response from across the aisle. But on one hand, you are going to see former President Trump speak at the NRA event. The Texas governor, Greg Abbott, according to the Dallas Morning News, is supposed to pull out in person and not be there, but give a video address. So a bit of a half measure in terms of exactly what his involvement would be. And at the same time, you are at least seeing an attempt on Capitol Hill to legislate in response to this in some way. John Cornyn from Texas has kind of been deputized to be the lead from Senate Republicans on doing something, but it is a very narrow scope that they're talking about. So there's there's a necessity for action and sort of careful rhetoric, but you are going to see still a very strong connection between Republicans and the NRA.
In the time that we have here, I want to address the gentleman from Houston. John Cornyn grew up partly in Tokyo. He is an internationalist by American standards. He went to UVA Law School. He has been with the judiciary and now an esteemed senator of Texas. How does John Cornyn speak to the strident Republicans that are against anything to do with gun legislation?
I think in this case, he would probably point out to them that there is Republican support for something very narrow along the lines of incentivizing states to put in their own red flag laws, maybe not even a federal red flag law. If he's talking to real Second Amendment advocates, he's still negotiating something that is so narrowly focused that this is not something you'd call an attack on the gun lobby or the gun industry. I don't think this is something that would entirely alienate him from that part of the conservative America.
Jack, is there anyone left in Washington right now? I mean, I believe that Congress is now gone for 10 days, even though they're dealing with what's going on in Ukraine, as well as China and some of the issues that we have seen there. And now, of course, the tragedy that we saw in Texas.
There was some discussion about either some members staying in Washington to keep talking about this gun bill. To be honest, a lot of the time when they're still negotiating and they're not holding floor votes, they've got each other on speed dial. So there is activity. I'm not entirely sure if some members are going to stay just to have some in-person meeting. But yeah, they're going into recess. There's not going to be real legislative activity. It's not an ideal time probably for them to mostly leave Washington, but at the same time, they can do work and are expected to continue to kind of try to negotiate something narrow on guns.
And what they're going to do, Jack, is they're going to go home and they're going to talk to their constituents. And when they're in a restaurant or in a cafe, people are going to come up to them. Are they going to be talking about what happened in Texas? Is there any groundswell in certain support, or is it going to be all inflation? Why are my gas prices so high?
The gun issue has gotten enough of a response so that is clearly a priority. It's something, you're going to see President Biden go to Uvalde on Sunday. It's in the news cycle enough so that I don't think this gets entirely washed over by all the other issues. But yeah, I mean, for a lot of these issues, especially that Democrats want to bring up, things like inflation are that's the overriding concern. And I don't know exactly how long the pressure to act on a gun bill of some sort will last, but it is there right now.
What is an assault rifle used for, Jack? I mean, do you use it for pheasant hunting or squirrel hunting? Or maybe like the Swiss, it's sort of maybe in your home and you never take it out? I mean, it's an AR-15, Daniel Defense. I don't recall this in my ute.
Yeah, that gets at what you alluded to earlier about the evolution of the NRA. I can't tell you from personal experience what you use an AR-15 for, but I can tell you it's a bit more of a cultural issue than just hunting.
There you go.
I mean, it was 2016 when Ted Cruz fried bacon by putting it around the muzzle of an AR-15 as a campaign stunt. That may get a little more toward it than shooting pheasant.
Yeah, unlike a full English breakfast, it's a full cruise. Jack Fitzpatrick, thank you so much. Just brilliant there. As always, in Washington today is all turned to Texas and his convention and the former president of the United States. How odd is it, Lisa, to be in Switzerland and the United Kingdom, and they have their own societal tragedies, looking back at the United States?
It's an anachronism, or not even that. It's just such an aberration. I was actually reading an article about how in the developed world, the United States is an aberration. There are other nations with the same level of gun violence, but they tend to be in the developing world. And how do you parse out that gap? What is going on in the United States is something of great study.
And as we've talked to our people in New York, the balanced debate here, away from the stridency, and as Jack Fitzpatrick mentioned, campaign stunts to fry bacon on a given muzzle. They do get really hot. I can take that from experience. But you really wonder, Lisa, at the end of the day, what's the first step forward? That incremental step that the senator from Kentucky wants to try to agree on with the senator from Manhattan and Brooklyn.
Putting your politics aside, right? It doesn't matter what side you're on. No one wants to see kids killed. No one wants to see innocent children gunned down in a classroom. And I think that everyone can agree on that. It's just the pathway to get there that has been the question for so long.
Let me do a data check here. We do this on a Friday into an interesting week and attuned to next week's American jobs report as well. I can't remember this. Farrell would know it. The ECB meeting?
Yeah, it's in
like,
June.
You know, it's like out there.
It's out there
It's a
somewhere.
Linda Ronstadt date. It's out there somewhere. Futures up 7, Dow futures. We quote the Dow futures for John Farrow. Futures up 3. The VIX 27.24. Yeah, we miss him so much.
I know. He didn't want to be with us because we were going to humiliate him.
I had fish and chips last night. Farrell went ballistic and emailed me and said, I can't have mashed potatoes while I have fish and chips. That's un-United Kingdom-y.
Well, yeah, it's chips are the potatoes.
Really?
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Bloomberg Surveillance from our studios at Queen Victoria Street. Spectacular studios. If you are ever in London, I will give you the best set of stairs in all of London. Show up at Queen Victoria Street, go around the corner, about one full English breakfast, and there is a Roman museum, and the museum itself is fantastic. Roman remains that we found. Mike, did you see that? Mike Bloomberg's in a Caterpillar bulldozer, and he's out back digging up the London terrain here. This is like 10 years ago, and they found Roman ruins.
I missed it. Was
You
he
missed
there
it.
today?
The stairs down to the Roman ruins is sobering about the length of soil across the centuries of London. There's your history lesson for this morning. Romaine Bostic's going, what? Futures up 9, Dow futures up 15, the VIX 27.21. In Roman, thank you so much for the advice where you said, Tom, lose the full English. Romaine Bostic in New York.
Hey guys, good morning. Well, back here in the U.S. where you guys are out on your European vacation, markets continue to sort of oscillate around here. It's really all about a lot of the retailer stocks and I guess consumer spending and how it's holding up. We did get those Costco numbers here, and it was interesting. I mean, comp sales growth was actually pretty good here, but there were some concerns really about margins. Those margins continuing to compress, and this seems to be the story for a lot of the retailers out there, even the ones that are, I guess, to a certain extent supposed to be recession-proof. Costco shares down about 1% on the day. And then you have Big Lots, which has a similar model to Costco, though not quite the subscription model. Those shares down 20%. That was a different story. Comp sales were down 14%. And more importantly, they posted a surprise loss for the quarter, flipping from profitability to a loss. And once again, it's about margins. It's also about inventory. Inventory, they are jumping almost 50% in the most recent quarter. And that was also the story for Gap, which reported last night. Their inventory levels were up 34% year over year. And now a lot of concern that a lot of these companies that have been posting these high inventory levels are now going to be in a position where they're going to have to start discounting into an environment where they're already being squeezed with regards to their profitability. Gap share is down 18%. This was really an ugly report here, and most of the commentary we got on the call didn't provide any clarity as to what the path forward here to reverse that trend. Now, one of the bright spots out there in the retailer space is Ulta Beauty, Tom. Everyone is out buying makeup and other sort of products to make themselves look good as they're out, tracing up and down the Roman steps or whatever folks are doing these days. Those shares up about 8%. Not only that, but they actually raised their outlook, and they said they're seeing no shift in consumer spending there. Yeah, it's big. You need your lipstick, you need your makeup.
Romaine, Afterthought has 52 bottles on her bathroom sink. I have no idea other than Ulta Beauty's making it hand over fist. Continue.
Yeah, well, they have a way of convincing people that you always need more to look well. And then, of course, there's the softwares. Yes, they do. They're great marketers over there, if I may say that. Workday, we should point out, keep an eye on the software stocks today, Tom. I know you're keen on that, but Workday missed big time here on their backlog growth, which has been decelerating, although their top-line growth was still pretty good. But we're seeing this all around here where investors really punish these companies if they don't continue to post that phenomenal growth that they've been used to. And one bright spot here in the chip space, Marvell Technology, a maker of semiconductor equipment here, higher by about 4% on the day, Tom.
Romaine Bostic, thank you so much. This is really a joy to come back to London for the first time off this horrific pandemic and talk to someone who writes a research note that in every case triangulates. What you do in the foreign exchange market is you look at not the yen, but always a currency pair, two different currencies. And then the pros use the Bloomberg to triangulate. They'll look at euro dollar. They'll look at dollar yen, and then the pros go and look at bring it around circuitous to euro yen as well. Jordan Rochester joins us now, G10 FX strategist from New York. Great to catch up with you this morning. Is it a time here where in the parlance you can make big figure bets?
Absolutely. The volatility
You're
of the market
excited. You wake up in the morning after your full English, you're like, let's go.
Well, we've just had 4% in the dollar selling off over the past few weeks, so it's really big moves on the back of very little. So it's a very volatile environment.
So it's a volatile environment, but it's an easy one to get right if you look at, for example, all the calls for parity that have gone the way of the English breakfast for someone like Stephen Major. It's now at 107 and seems to have gotten some foothold there.
Indeed. One of the biggest flaws in my sort of way of approaching things is getting too kind of set on these big parity figures. But I do think if you look at euro where we are here today, we've had a big 4% rally higher. What's really strange is the Chinese renminbi is weaker, but euro stronger. The main trading partner of Europe is under pressure here with their lockdowns and not enough stimulus, yet the euro stronger. And it's all boiling down to what I've been surprised by is the US terminal rate pricing really softening, and that's kind of allowed this weaker dollar. But I think we've probably had a little bit too much of that dollar weakness, and we could see euro go back down lower next week.
And that's been basically your call, right? You've been talking about how the euro does not look cheap here, even though it has been cheaper than it has been in years. What's the level you're targeting, given the resilience that we've seen over the past few trading sessions?
So if you use valuation models, you have two ways of doing it, really. One is deflating it by consumer prices, or one by producer prices. Most of the time, producer prices are the things that you actually trade for foreign exchange. And producer price inflation in Europe is nearly 40%. It's higher, it's worse than the 1970s for Europe. It's not the same for the US. Right. So that's really devalued the value of the euro for its medium-term sort of level. So 109 is where I'm getting my sort of fair value for the euro. But I think, given the trade deficits collapsing, given their main trading partner, China, is under pressure, given the food crisis, the energy crisis, euro to parity is still possible in the months ahead.
There's a lonely crew out there. Focus Landau, Deutsche Bank, El Arian at the University of Cambridge, Jeffrey Yu with a brilliant note from BNY Mellon saying we need to start learning lessons from the Plaza Accord. They're not saying we will see a Plaza Accord, but consensus says no, this time is different. Should we worry about a dollar so strong for EM that we have to adjust a dollar?
Well, the main question is, Tom, do you think policymakers can actually work together to achieve that? Because everybody's facing an inflation problem right now. If you have that Plaza Accord at the sort of EU-US level, I can imagine it could work. But then all the other partners would be also wondering, well, what about EM as well? So for China and the US to coordinate on currency manipulation after years of the US saying China's been manipulating its currency seems quite a big stretch of the imagination. But I could see it on the EU-US level, but my base case is we don't get some sort of agreement like that.
What's the main driver right now of currency volatility? Has it been central banks and differentials there, or has it been economic outlook?
Well, both. So the economic outlook drives the central banks. I think in terms of what's been driving the markets, hello, Mark. In terms of what's been driving the markets and central banks, we've been essentially seeing a food crisis, an energy crisis. Yeah. And that's translating to central banks overreacting, thinking this is a growth shock. And I think that's probably wrong. This is an inflation shock.
Jordan, hello. He's trying to basically talk down the clock. So you
he is. Tom, Lisa, great to see you here. Sorry for interrupting your show. Sorry for crashing the set. But I did hear Jordan discuss the dollar. Jordan, I believe you're going to be buying the pints today. Do you want to explain to the viewers why you're going to be buying pints today for me?
Yeah, 2 weeks ago, me and Mark had a little cheeky conversation about the dollar, and he was right, and I was wrong.
Don't sound so shocked. Yeah. Don't sound so shocked.
What was it? Come on, elaborate.
So in terms of my thesis, the trade balance of euro has collapsed. We've got the situation with growth, but Mark was looking at the US terminal rate pricing, I think, when he made his call on shorting the dollar. And I just didn't see that happening, and I got that wrong.
So I think the growth expectations have come down much quicker. We've traded the stagflation theme much quicker. So how much longer can we do for that? Do you think we have another week or two of that theme, or do you think it turns around very quickly?
I don't know about you, Mark. Most people are on holiday next week in the UK. We've got the Queen's Jubilee. It's kind of tough, but there's one thing to watch out for. We've got European inflation next week.
I'm going to be having a hangover all week after the pints you're going to be buying me today.
He's going to get some Vindaloo to go with it.
Are you auditioning? What is this, Pharaoh's idea? You're like auditioning for the damn show? This is Pharaoh's idea.
The importance is to not ask permission.
To pull the old fart off stage, right?
Am I doing a good job?
You're doing a great job. I hate to say, I got to get something out of this conversation.
Do you want to join for pints? They're all on Jordan.
Pray tell, which beer will you quaff?
I'll be having an ale while I'm in London.
An ale. Do you have a brand that we like? We like Swan.
I like experimenting with the local ales.
That's very good.
I'll rely on Jordan's guidance for what I should be having.
I'm more of a Camden guy, so Camden House, Camden IPA, so we'll be trying some of that as well.
Well, thank you. I appreciate the bet that you guys had. Honestly, I think that the key question and the bigger and the sort of broader question, I know you're going to go into beers and different things.
Folks, and for those of you that are going, what in God's name is this about?
You're not alone.
This is the fun and spirit of Wall Street, which I think is perceived in the media wrong, and that everybody's like, oh my God, he was wrong. Jordan Rochester was wrong. Shoot him. No. This is, people get it wrong all the time. I get it wrong. Were you like, what's the level of wrong here, Cudmore? Was he like way wrong, wicked wrong?
This time the timing worked out quite conveniently for me, which is why I'm choosing to play. But if you're not getting it wrong, you're not saying interesting enough things. You need to be getting it wrong almost half the time. Hopefully not more than half the time.
Do you think I look good at a podium? What do you think?
Am I allowed to say no comment? Is that appropriate at this point? I don't want to get in more trouble by answering honestly, and I don't want to lie live on air.
For
you
the
look great at a podium, actually.
For the radio, Tom is moving the podium back and forth. Mark Cudmore just crashed our set of M Live here at Bloomberg. And honestly, though, Jordan, there is a question of whether basically this goes to a timing issue. What is the correct timing right now for currency bets? Is it a one-week timing, as you can see, that seemed to have backfired for you this time?
Well, it's been 4% in 2 weeks. That's a big move. So I think next week we've got low liquidity with half the UK on holiday. Flash inflation for Europe will come in really strong. So I am worried that Euro goes a little bit higher next week. Then after that, it really is a fade.
One of my best conversations in Davos was with the giant Kishore Mahbubani of Singapore, Mark, where you are truly expert. When China opens up, the lockdown's over, how do those currencies react to perhaps a China boom?
I think it'll be massive for the region, but it's when is the real issue, because many people in Asia think it's probably going to come sooner than people in the US. We're running the MLive Pulse survey this week, and we can see there's a massive regional divide in expectations around the China path from here.
Is he with us next break? Do we keep doing this?
I just crashed temporarily. I think I'm going to go have pizza now, actually.
Well, good. We'll have a full English pizza.
I'm not working here. I'm just taking my bet.
Would you imagine what a full English pizza looks like?
Oof, my goodness. Lots of mushy stuff on top of it.
I think, Jordan Rochester, thank you. I think, Mark Cudmore, thank you. Good. MLive.
I got to thank
you. I'm going to say
Folks,
thank you to
MLive
both
is
of
what
you.
the pros look at on the terminal. It is the really pro dialogue of what's going on in the market. We devolve it down to Dow Jones Futures up 3. This is
What
Bloomberg.
do you mean we?
Good morning.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Boris Johnson pulled no punches when Bloomberg asked about the prospect of negotiating with Vladimir Putin. The British Prime Minister responded, "How can you deal with a crocodile when it's in the middle of eating your left leg?" Johnson said that the Russian president is completely not to be trusted. The Russian owner of the $325 million super yacht linked to billionaire Suleiman Karimov has lost an appeal to keep the U.S. from seizing it. The Court of Appeal in Fiji has dismissed the petition by the vessel's legal owner, an investment firm. Countries have been going after the yachts, planes, and villas of Russian tycoons who have been put on sanctions lists. And for the first time in 2 years, profits at Chinese industrial firms declined last month. Industrial profits fell 8.5% in April from a year earlier. COVID outbreaks and lockdowns disrupted factory production, transport, logistics, and sales. And it's a heartening development for the Federal Reserve, but maybe not for American workers. Staffing firms say that companies are now becoming more cautious after handing out hefty salary increases over the last year. Economists expect data to show annual wage growth this month was 5.2%. That's down from 5.5% in April. The Fed sees wage growth as a big source of inflation. And Texas Governor Greg Abbott reportedly has dropped plans to address the National Rifle Association's annual meeting in person today. The NRA is meeting in Houston just days after the school massacre in Uvalde, Texas. According to the Dallas Morning News, Abbott will be in Uvalde. He'll deliver a taped message to the NRA instead. Former President Trump will deliver his speech in person. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
To acknowledge that oil and gas demand continue to grow very, very sharply. Inflation is high, but this is the first time in a couple of years where there are no restrictions, and people are going to be driving and flying as well. So both gasoline and jet fuel prices will continue to rise.
Why do people watch Bloomberg Surveillance? Yes, they watch for Mark Cudmore. Thank you, Mr. Cudmore, for the MLive appearance here moments ago. But they really watch for world-class hydrocarbon coverage. We're going to do that. The Jewel of London, Amrita Sen, just brilliant on the microeconomics of energy there. Right now, we're going to go to the Jewel of New York. Kriti Gupta here on a gallon of gas. Kriti, what do you got?
On a gallon of gas, Tom, and a little fun fact, I used to work for Mark Cudmore. That was a treat for us all. On the chart of the day, though, let's talk about the gallon of gas here, because this is important going into Memorial Day weekend as a lot of Americans hit the roads and really take those road trips. What I'm looking at here is the amount of work in minutes at a U.S. federal minimum wage it takes to pay for a gallon of gas. 40 minutes, Tom. You have to work for 40 minutes to get 1 gallon of gas. And for our radio audience, what you need to know here is that the line just goes upwards and upwards and upwards. And really, you haven't seen that kind of acceleration since going back to 08.
Kriti, help me here, folks. This is the single best chart Kriti Gupta's ever done. Because, Kriti, what you're comparing is for people who spend a lot of money on food and a lot of money on hydrocarbons.
Right, and this is really important when we talk about the lower income part of the community, the ones that are getting hit hardest by inflation. If you look at retail earnings, for example, over and over again, you hear this theme. If you are a wealthy consumer, you are insulated to some extent from the inflationary pressures. If you are on the other side of that spectrum, you absolutely are not. Think about the people who do, to your point, Tom, have to go get groceries, have to fill up the tank, and right now that's getting harder and harder.
We move from the gorgeosity of Amrita Sen and Kriti Gupta to the gorgeosity of Will Kennedy, our executive editor for energy and commodities at Bloomberg. We have Christian Malik coming up here with J.P. Morgan. What is it, in the next hour, Lisa?
Yeah, it's in the next hour.
Next hour, something like that. 100 pages from J.P. Morgan where the price of Brent is going to go up because of the microeconomics of Amrita Sen. State their thesis. Is it that supply doesn't come on, or is it demand just takes off?
It's a bit of both. As Amrita said quite rightly, we're getting into the demand end of the season.
Memorial Day, driving season, people flying, diesel demand remains strong. So we've got strong demand despite everything else going on in the economy. Supply just can't really respond. There's very little spare oil supply capacity in the world. OPEC has a couple of million barrels, but it's reluctant to use them. At the same time, a lot of people are reluctant to buy Russian crude. And the big problem we have in the market, especially in the North American market, is a lack of refining capacity. And that's why you're seeing the gasoline prices, diesel prices rise to records, even though oil is a long way off those records.
What does a windfall tax or subsidized kinds of efforts do to that demand? How does that affect the situation and, frankly, the quicksand of higher prices?
So you've got a lot of governments around the world, the UK yesterday, as you say, but also people cutting gasoline taxes in different countries, other European countries subsidizing natural gas and electricity demand. When you subsidize something, make it cheaper. People are going to use more of it. So you're adding fuel to the flames. The problem with these measures is that they do help people. Of course they do. But they don't solve the problem is that we have a very, very tight energy market globally. And people are talking all about subsidizing consumption. It's strange that politicians aren't talking more about how to reduce consumption, make things more efficient. So yes, there are dangers in these sort of measures, as you say, Lisa.
Are you starting to see more finances diverted into renewable energies and other sources? And I say this after having come from Davos, where everyone was talking in a very theoretical way. Are we actually seeing it on the ground accelerate in the wake of some of these price increases?
To a point, I think that a lot of these technologies, wind and solar in Europe in particular, the economics make a lot of sense. But there are real problems to accelerate things. I would point to two. Supply chains have hit the solar industry. A lot of materials that go into EVs, for example, like lithium, are hard to find. It's hard for car makers to build as many EVs as people want to buy. And then there are regulatory problems. You need a lot of permissions, especially in Europe, to build a solar farm, a wind farm. It takes years, and it's not happening as fast as it perhaps needs to.
We get a daily lecture. Sometimes it's only weekly lecture, but poor Abramowitz and I get a daily, weekly lecture from young Pharaoh on how hydrocarbons start in London. He's always quoting this LME thing versus what we do in Chicago. In that, you are the foundation of what we do on hydrocarbons worldwide out of London. We're always talking about, what's his name? Javier, what's his name?
Blas.
Javier Blas. I want to talk about Rachel Graham, because you go to the Bloomberg and you look at oil, and here's Rachel Graham out of Moscow, out of Platts, out of commodities under you and Stewart and the rest of them. And she's got 5 charts on this disaster we're in right now. Tell us about those 5 charts.
What Rachel's really looking at is just how tight product markets are in Europe right now, and that the problems that refiners are having just getting enough product to people. The big problem in Europe is that we relied hugely on Russia for our diesel in particular. We're getting a quarter of our diesel from Russia, and that's not happening anymore. And it's really shaking up the whole global oil market. It means that we're importing a lot of diesel from the US at a time when the US needs it. And this tightness, caused partly by the pandemic, caused partly by the war, is just spreading through the whole global energy market.
I mean, I think this is critical, and I think, frankly, this has been the most important interview of the week, because Lisa and I are working on this, and just tell me if this will float. Al from New Jersey. Oh, Heathrow, Al, they're out of jet fuel. Can I pull that off?
Sorry, can you pull what off? Can
I call the guy in New York and say, they're out of jet fuel in London, we can't get home? Does that work? Does that help me here?
Well, if you go on the TV now and tell everyone to get on a plane right now.
Oh, they're out of jet fuel.
This is going to really fly.
Run to the airport.
Are we really run out of jet fuel?
We're still live, you know that, Tom.
What a shock. That never stopped. That never stopped.
I know that. I'm fully aware of that.
This is important, though. Are we going to run out of this stuff like, VW rabbits and lines in 1978?
I think there are people who are scared that in certain airports this summer it's going to get hard. I mean, there are airports in the US that aren't on pipelines, right? Heathrow, I'm afraid to tell you, Tom, Heathrow's are connected to lots of pipelines. There's a pipeline from a big Exxon refinery straight into Heathrow. It's going to be tough.
Will Kennedy, go away. Thank you so much. With our leaders.
Did you hear his sigh?
Do you know
when
I made a
him?
video? I got it. You know,
we have to be on.
We love Big Jet Live. The guys out there in the rain at Heathrow on that day when, you know, no jokes. It was wicked, wicked dangerous. And I'm literally making a movie last night of the Gorgiosity coming in on Swiss Air going, triples.
Oh, we're the only.
Heathrow is, can I just say Heathrow's great?
Yeah.
What is it about the taxes at Heathrow?
The taxis?
The taxes. English.
The
American
levies.
English.
The levies.
Taxes.
The levies.
The levies.
Well, yeah, it's an expensive airport, isn't it?
It's transitory and temporary, or whatever. Sunak said yesterday.
You know, we've got to get our buck.
I got to go data checker. They won't let me come back to America. Red and green on the screen. Futures up 2. Dow futures go a bit negative. VIX $27.30. Dollar, well, it's churning a little bit weaker. Yen 126.90. Euro 107.09. With Will Kennedy, we have to quote petroleum. Brent crude 117 the barrel. On radio, on television, stay with us from London. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
we going to be in a recession or are we going to be in a rocky landing? Maybe soft landing, but I think soft landing is kind of off the table.
The consumer will follow where the labor market goes, and that's why I really emphasize the labor market.
The inflation story, and probably I think for me, more important, the job story, is still something in flux.
If they want to get inflation down to 2% within 6 months or even 1 year, they're going to have to overdo it.
If Powell overshoots, we are going to see a material slowdown.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning from London. This is Bloomberg Surveillance on Bloomberg Radio and Bloomberg Television. Tom Keene, Lisa Abramowitz. John Farrow is off because he does not want to have to deal with our English breakfast references today, and he will come back on Tuesday and tell us all the things that we got wrong, I am sure. We are a countdown to the consumer in the United States as we're going to get some spending data here in about a half an hour time, and I really do wonder what this will show if it confirms the Bank of America view of the strength of that consumer, Tom.
Well, the consumer is a huge, huge question here, Lisa. And what I would say, and I'm going to go to a comment made by the great environmentalist and economist Lord Stern of London School of Economics. This entire week that we've had, people are puzzled. And you're right in that they're no more puzzled over the consumer than anything else. There's just puzzled.
And frankly, I think that the biggest takeaway from Davos this year, where we had just came from, was that there was so much bearishness that there was a bit of optimism that perhaps that was the consensus. And perhaps that's the optimism that you're seeing today with possibly,
this week.
This week, possibly the first weekly gain going back in 8 weeks.
In the bond market there, we make jokes about the 7-year auction, but it certainly reaffirmed the appetite out there globally for U.S. paper, and 2.72% on the 10-year yield. Not the tick to tick, but on a week or 2 week basis, that's a real adjustment.
Tom Keene cares about bond auctions.
Oh, I
just
do.
have that. I mean, honestly, that's my big takeaway from that. You were watching the auctions yesterday.
I was. I mean, there they were. Our schedule here is to be in London today. Monday is Memorial Day, and a fractured United States of America will be in transit. John Farrow scheduled, of course, to be with us on Tuesday as well. And then we'll begin an eventful week looking at the American labor economy and on to a critically important ECB meeting, maybe the one on eggshells the most in Davos, was Christine Lagarde. You going to give us a brief here for the hour? Like, what do we have coming up?
Sure. I mean, a half an hour.
You want a brief about the dash to Heathrow?
I'm going to dash to Heathrow after this. And luckily, I have the ammunition for it because of my English breakfast that I'm still full with. But we are going to be looking at personal consumption, personal spending, as well as personal income at 8:30. At 10 a.m., we get University of Michigan consumer sentiment, which is going to probably come in around the same level as it was before, at the weakest level since 2011. And we have a slew of incredible guests. Honestly, Christian Malik, we've been talking about this, coming up of JP Morgan, as we try to discern the dynamics of an oil market, a crude market in turmoil.
I told Mohammed El-Arian folks that Malik was a more important interview today than Dr. El-Arian, and he hung up the phone. Worked out well. Liz Young never hangs up the phone. She's hugely qualified. She is at SoFi, Anthony Noto's wonderful experience in direct finance. This is not consumer finance. It is not lightweight. And when you have Liz Young spearheading your investment strategy from her work at BNY Mellon, her chartered financial analyst work as well, thrilled to have her today, but with a much more in the trenches view. Liz Young, forget about the spread market, forget about hyper-pro fixed income analysis. How do people out there recover from massive bond price losses?
Well, the massive bond price losses, I think, really occurred earlier this year. The first quarter for bonds was really painful, and it was also really painful for stocks. So that was a tough quarter to get through, where you have both bonds and stocks going down at the same time. And everybody that had been screaming 60-40 is dead was sort of saying, I told you so. It didn't work in that first quarter. But now we're in a place where bonds had sold off more than stocks in the first quarter, and in the second quarter they had a chance to rally back, and some of the diversification benefit is here again. At least it is in the last month or so. Now, moving through the rest of the year, it's yet to be seen what's going to happen. It's really dependent on what the Fed actually does and how the narrative shifts. So I think, as you guys have already pointed out, the consumer is really the most important data point here.
All right, Liz, you've gone from advising on institutional investors, and right now at SoFi, you deal much more with retail investors, and frankly, younger ones at that, as some of the tech-savvy prowess of SoFi will cater to. How is that different after all of the retail interest that we saw of younger individuals? Is that shifting at all as a result of some of the turmoil of 2022?
Well, the difference in the investor base has really shown a lot of different preferences for what they want to be invested in. It is a much more tech-savvy base, right? A younger generation is much more tech-savvy, just more used to that. So there is more interest in the titans of tech and investing in things that are communications-based. They're not as interested in traditional finance companies. There's not a lot of investment in things like big banks or just finance in general. So there are different preferences there. The other thing is obviously a huge interest in crypto and a lot of opinions on what central banks control and what we can do in the economy and the control that we're under as far as central banks go around the world. So it is a completely different narrative. There are different interests and different risk appetites. I think that the investor today, and this isn't necessarily just younger investors, but a lot of investors today have become much more short-term focused because we're hanging on data points every week. We're watching the market every day. And when you have big swings like this on a daily basis, it does cause people to be much more short-term focused, whereas financial advisors and maybe more experienced investors or ones of yesterday are more concerned with a 5 to 10 year period, diversification, traditional asset allocation.
So, Liz, how do you direct then your comments, considering the fact that they will possibly have a shorter time horizon, greater risk appetite at a time, when we also are watching tick by tick with an incredible amount of uncertainty and humility, each data point not knowing which way of the T, to quote Tom, the Fed is going to go in, and frankly, which way the economy is going to go?
Yeah, well, so if we compare this environment to, say, the environment of 2020, when a lot of those newer investors came into the system and were trading and they got really interested in it, which I think is wonderful, this, however, is an environment where I think you need to do less. Because as things change on a daily basis, you can feel like you're wrong on a daily basis. And that's when you start to make mistakes. That's when you start to make reactionary moves in your portfolio, trading type moves instead of investing type moves. This is a time where if you want to buy things because you have cash on the sidelines from sells earlier in the year where you took profits, that's great. Start dripping in to some of those things that are interesting and that are going to look like bargains in 3 years' time. But this is not a time when you try to chase and call a bottom, call a peak, call an inflection point, because honestly, inflection points are happening daily.
Right. Liz, I want to go Friday nerd on you. I know you can handle this. It'll be fun. I want to talk about, as you mentioned earlier, the 60-40 diversification model, which clearly has been tested in the recent months. I want to go back to Peter Lynch, the giant at Fidelity, in his famous word, diversification as well. That starts with the Markowitz history, the whole CAPM, and the giant Markowitz on how you do this, how you diversify. What have we learned about the diversification of 60-40 in the last quarter?
In the last quarter, we've learned that it is actually back and it is working again. Now, the reason that it started to be talked about that 60-40 was dead is because we went through a 40-year rally in bonds. So it didn't seem like bonds were going to be able to provide the diversification for the drawdown in equities. Now, the whole point of a 60-40 is 60% equities. Equities, of course, can have deeper drawdowns than bonds, so you want to buffer that drawdown. And for an investor, it's really important to avoid those huge losses in stocks. So bonds were supposed to provide that. But if you remember what happened in the last 5 to 10 years, we've had this huge growth in alternative assets. I would actually put crypto into that category, but alternative assets, so things that can provide another layer of diversification that are now available to the individual investor. Previously, alternatives were only available to investors, high net worth, and institutions. Now they're really available widely. So the 60-40 has turned into maybe something that includes, I don't know, 10% alts, maybe 20% alts, depending on the investor. But it is something that is maybe a little bit antiquated. But bonds have provided diversification in the last few months.
Did she just call me antiquated?
I think that she's saying
I think she
concepts
did.
are. Are you trying to get her?
Liz Young,
you did
thank you
not.
so
You did
much.
not.
Our regards to Mr. Noto and your good experiment. SoFi there with a real edge to the consumer and a technology forward pace. That was brilliant, and these are some really important questions. I think everybody knows I'm not big on 60-40. I've had the honor of talking to Markowitz about this, and I'm just not big on the 60-40 certitude.
Well, honestly, I think 60-40 means something so different for each individual, right? I mean,
Yes,
honestly, when we talk to
this is
people,
critical.
they talk
Yes.
about the mix of the
Yes.
60, the mix of the 40. And so right now what we're hearing is basically how much of a mix of everything until you just disregard the whole thing in general.
I'm going to go with Liz Ann Saunders over at Schwab. Say good morning to Dr. Ross up at MIT. Factor analysis was really important as a buffer against the mathification of the business, as you see, with 60-40.
And frankly, that has been absolutely underscored in the past 6 months because it all has been sector by sector, what's done well and what hasn't done well, that we've seen dramatically. What are you doing?
I
Tom?
just learned here, it's like an old Chrysler van, folks. I got a coffee cuppy thing here.
Yeah, it's actually lucite. It's really lovely.
I can put my coffee cup there. My Tang. It fits the Tang size as well.
That's great.
It's very cool.
We're enjoying London. It's
We
been
are
wonderful,
enjoying it,
and
I
it's
think.
lovely
We're
here.
even on speaking terms, even better. Futures up 11, Dow Futures up 18. This is an important interview as we talk to Jordan Rochester, a different view. George Saravelis, Global Head of FX, Deutsche Bank. On radio and television, good morning.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Boris Johnson says there's no point in trying to negotiate with Russia's President Vladimir Putin. The British Prime Minister sat down for an interview with Bloomberg.
How can you deal with a crocodile when it's in the middle of eating your left leg? What's the negotiation? And that is what Putin is doing. And any kind of, he will try to freeze the conflict. He will try and call for a ceasefire.
Johnson also urged that more sophisticated rocket systems be sent to Ukraine so Ukrainian forces can hit Russian targets farther away. And it is the latest U.S. challenge to China. The Biden administration and Taiwan are planning to announce negotiations to increase economic ties. The talks would focus on enhancing economic cooperation and supply chain resiliency. A deal would fall short of a free trade agreement. Beijing has warned Washington about its relationship with Taiwan. And the White House is scrambling to do something about those record-high gasoline prices in an election year. Bloomberg's learned the Biden administration has reached out to the oil industry about restarting shuttered refineries. The average price of a gallon of regular unleaded gasoline stood at $4.60 on Wednesday. Senate Democrats said they were a bit more optimistic about a compromise with Republicans on gun control legislation in the wake of the Texas school massacre. Democrats appear to be willing to accept incremental steps. Many senators are going home for a 10-day recess and will meet with voters who may pressure them to take action. Global equity funds saw their biggest inflows in 10 weeks, led by U.S. stocks. Investors added about $20 billion to the global stocks in the week that ended Wednesday. Cheaper valuations lured buyers after what's been a steep sell-off on those recession fears. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Is where I'm getting my sort of fair value for the euro. But I think, given the trade deficit's collapsing, given their main trading partner, China, is under pressure, given the food crisis, the energy crisis, euro to parity is still possible in the months ahead.
Jordan Rochester of Nomura there with a good conversation. We are having wonderful discussions here, and no surprise, in London on foreign exchange. Lisa Bramwitz, Tom King, yes, John Farrow, scheduled to return here in a number of days. He was delayed in Capri, something about jet fuel. And we look forward to seeing him. I believe we all get together again Tuesday in New York. The hallmark of what we invented at Bloomberg Surveillance is difference of opinion, and now you're going to be hit over the head with a difference of opinion. George Saravelis has to do tag team with Folkers, Landau, Hooper, Ruskin, and the rest of them at Deutsche Bank. He is aged. He joins us this morning as Global FX Research Head. George, you say this is the mother of all safe haven moves to U.S. dollar. We're looking at euro. We're looking at yen, and you say focus on the flow to dollars.
That's right, Tom. If you look at the last 6 months, you can see it in the data. You've seen a huge accumulation of dollar cash by all investors. So the investors have been selling U.S. equities, they've been selling U.S. bonds, but they've just been keeping the dollar cash, and not only that, accumulating even more. But when you look at the size of that accumulation, it's reached historically very high levels, similar to COVID, similar to the Trump trade war. So we published our outlook for the next few months. The simple point is the dollar is pricing so much bad news, and the market is so overweight the dollar that the risk is any sort of margin positive news, and you see that historically extreme risk premium start unwinding.
With respect to your boss, David Folkers Landau, who's worried about fiscal largesse, and maybe dollar strength getting out of hand. There's others picking up on this, and they're looking for some redux of the Plaza Accord. George, you go the other way, and you say we're not going to see a redux of Plaza Accord need to weaken dollar. It's going to happen. Maybe we need a Motel 6 Accord out at Newark Airport in New Jersey. Why are we not going to need a Plaza Accord?
So I think, Tom, the simple answer is the ECB. The ECB will do the job. And as we've seen over the last few weeks, the ECB is starting to wake up to the reality that rates need to be raised very quickly. We're only an inflation print away, and let's see what happens next week. But I think we're only an inflation print away from a 50 basis point rate hike from the ECB in the July meeting. And the market has been so focused on the Fed story, it's missed the European story. And the European story has a mix of very high inflation, but also outperforming growth. And it's surprising how pessimistic the market has consistently been on European growth. But if you look at data surprises, they're actually moving in favor of Europe. Consensus GDP forecasts for this year are in fact higher for Europe than they are in the US. And the reason is fiscal policy. Europe has a very supportive fiscal policy mix. It's been easing policy to offset the energy cost. It's going to have more defense spending. It has the NGEU fund. And essentially, I think the stage is being set for a European capex boom. So I'm on the optimistic end as far as the European story goes. And I think potentially we have significantly more repricing to have for the ECB.
And when you say significantly more pricing, George, you're even looking out to 110 and possibly 120, I believe, going forward versus the dollar. How much would you have to see a weakening to change your view?
So I think if you take a step back and you look at the euro, up until 2014, and this is even during the Eurozone crisis, it was in a 120, 140 range. And then one thing happened, the ECB went negative during Draghi's tenure, 2014, 2015. And that range shifted from 120 to 140 down to essentially parity, 103, 120. And what I'm most focused on is as the entire European rate structure shifts back to that old regime, that should be a significant structural source of support for the euro, potentially unwinding some of these big capital outflows we've seen. And the market is very focused on the deterioration in the European trade balance. But for example, the US balance is deteriorating even faster. And I think the more interesting story going forward is the effect of positive rates in Europe and what do they do to the capital account.
George, there's also this weird aspect of the dollar, which is that commodities are priced in it, right? So as the dollar weakens, as you predict, that's going to mean even higher costs of fuel, which has been one of the drivers of inflation in the euro region. How much is that factoring into your expectation?
So it's interesting because you finally start to see ECB discussions evolve and mention the euro significantly more. The perfect example of that is the French central bank governor. A few weeks ago, he highlighted the euro in the middle of his speech. Then when the euro was going further lower, he raised the same sentence and brought it to the top of his speech. A higher euro, the correlation has flipped between the euro and commodity prices. So we've been seeing stronger commodities, but a weaker euro at the same time. If the euro reverses course, starts appreciating, and I think the ECB is very aware of that, it actually reduces some of the imported inflation pressure. And the ECB, I think, is now very focused on the fact that it risks being behind the curve in a similar situation to where the Fed was just a few months ago.
George Cervelis, thank you so much for all your work for us. Greatly, greatly appreciate to you and all the team, including Matt Lazzetti, with that out there recession call for Deutsche Bank as well. Lisa, I want to go back to Davos, and as George alluded to, but I think you've had huge leadership on this, and that is lockdown, China, boring, let's move on. And you and others have said, no, it's going to end, then what? And to me, besides the ECB meeting next week, will it be good to get Farrow back so we actually know what we're talking about?
It would be terrific
on ECB?
to have him back. We're looking forward to having
Farrow
him back next
gets
week
it.
on
Us,
Tuesday.
no.
Yeah.
But China is a big deal.
Especially as we start to get more insight into what some of these lockdowns actually mean with respect to supply chain disruption.
But they're going to end.
There was a story. Okay, so they're going to end. What happens then? one, because then you have a population that's not fully immunized. But how do you get there? And what kind of social unrest do you get on the way? And I say this as there was an article today about the Apple factory, the manufacturers, and how there are actually huge incidences of unrest in some of these places because people have been quarantined from their families. There have been lockdowns.
Right.
There's been so much that's been really problematic.
It's TV, folks. You make jokes about this, but guess what? You're right. This is not funny.
It's not funny.
I'm suggesting they don't have a choice. They have to fix this. These are immovable forces for a totalitarian regime.
And perhaps this is why Premier Li Keqiang was talking about how this is going to affect the economy in such a big way. There is some speculation that maybe this is the predecessor to a softening in the stance.
Now, we will see. I mean, there's a lot out there. Bloomberg with an important article today on the domestic view from Beijing. Really must read. I'll try to get that out on Twitter. Green on the screen again. Futures up 9. We quote the Dow futures only when Pharaoh's not here. Up 16. The VIX 27.18. Sterling. It's a full English sterling. 126.34.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Bloomberg surveillance from London. Lisa Abramowitz and Tom King. Jonathan Farrow. There's been a Farrow sighting. We're pleased to report something about AC Milan. I have no idea what that means. Farrow scheduled Tuesday in America. Yes, we do have Monday off, but Bloomberg, of course, will be monitoring global news on the American Memorial Day. There is today, and on a Friday, you sort of go, Friday, really? There is a ton of American economic data. It's beginning to come out, looking at things like retail inventories, far more the spending, the income, and the PCE deflator as well. Here is, in New York, Michael McKee.
Good morning, Tom. Good morning, Lisa. Let's talk about the deflators first, because that's the number everybody cares about. It's the Fed's target for inflation. The PCE deflator, the headline number, comes in at up 0.2%. That's significantly down from 0.9 the prior month, and that makes the year-over-year headline number 6.3%. The core, which a lot of people are following because they think the Fed is going to be much more interested in that, given what is driving inflation these days. Core up 0.3, same as last month, but that pushes us down into a 4 handle, 4.9% for the PCE core. That's down from 5.2% the prior month. So the inflation numbers show a little bit of improvement. Personal income up 0.4 on the month. Personal spending up 0.9 on the month. Both of those a tick down from where they were in March, but still healthy numbers. Real personal spending, this is interesting, up 0.7%. It was up only 0.2 last month. And of course, the issue there is that you have to subtract inflation from the spending numbers. And it looks like spending was reasonably strong even without that. And then the other number that's out this morning is also good news. The advanced good trades balance for April came in at $105 billion. It was $125 billion last month. And of course, trade subtracts from GDP. It was a big hit to GDP last month because the trade balance had deteriorated to a record low. And so we see some improvement there. Right. Still big, but mathematically, it will help.
Michael, these are fascinating data, and I think we're going to see a real churn in the market with the 2-year yield giving me a fractional lift right now. But I would really stay tuned, folks, to see what those yield dynamics do. Michael, I want you to do what you do best, which is take the inflation data of Mr. Powell's PCE deflator and bring it right over to what we see at 10 o'clock New York time with the 1-year and the 5 to 10-year University of Michigan guesstimates on inflation. How does a pro like you link those two together?
Well, what's been interesting, it's been interesting, Tom, the last couple of weeks we have seen inflation break-evens fall on Wall Street, 5 and 10-year numbers coming down as the market seems to accept the fact that the Fed can get inflation under control. So we're watching to see where the consumer is at this point. The New York Fed puts out a survey of consumer expectations for inflation that found the long-term, 3 to 5 years, was 3%. So consumers were pretty optimistic about inflation coming down as well. We'll see if that gets confirmed by the University of Michigan numbers.
In all those numbers, and McKee is expert at this, folks, I'll make pretending I'm doing it. I'm going to suggest 5.2% down to 4.9% on the PCE core deflator year over year. At least it gets my attention. With an equity lift, futures up 13, and Dow futures up 30. Continue to look at the markets. Michael McKee, thank you so much. We now synthesize to the global economy and do this with Neil Shearing, with always a complex, readable note from Capital Economics, joining us in our London studios. Neil, of the triangle, the tripod that you're looking at of global economics, what interests me is your study of real wages. And what I find fascinating in the United States is on an x-axis, the area under this collapse in the real wage. Boy, it's getting long. The integrand of negative real wages is really getting substantial. How does that affect behavior into next year?
Well, we've got a flavour of that in the data that's just come out, right? We've had personal consumption growing 0.9, but incomes growing much less than personal consumption. Consumers are dipping into their savings, and that's what's sustaining the health of consumption in the US. Now, you're right that there's been an erosion of real wages in the US, and I think that's going to start to weigh on demand as we head into next year. You combine that with what the Fed's doing, rate-sensitive sectors, housing, I think is going to slow. I don't think there's going to necessarily be a recession, though. The strength of the consumer data that we had this morning, I think, is testament to that. If you're looking for a recession and you're concerned about squeezes in real incomes, then here in Europe is the place to look. The terms of trade shock that Europe has experienced is an order of magnitude greater than that the US has experienced as energy prices have surged, and that is hitting consumers here in Europe.
Before we get to Europe, and I do want to follow on with that, I'd love to get your sense of what it does when people see real negative wages, right? Because we talk about how the consumer continues to spend in the United States, and we see that with this data coming in faster than expected in the prior month. Does it matter that they're earning even less on an inflation-adjusted basis, or do they just have so much cash in their savings and, frankly, the availability of credit to go out and buy whatever they want that it doesn't matter?
But again, the interesting thing is the different story in the US compared with the Eurozone. In the US, there's a much larger fiscal stimulus. Stimulus checks are landing 3 times in the US. If you look where real incomes are going to be at the end of this year compared to the pre-pandemic level in the US, they're going to be a bit higher, I think. Despite the surges in inflation that we've had, just because the nominal income growth through the pandemic was so strong. In Europe, they're going to be down.
So it's very controversial, Neil. You talk about the stimulus and the stimulus checks. A lot of people look at them and they blame them for the inflation in the United States today. What's your view on the ramifications of the stimulus? Was it basically more inflationary than anything else and hampering of the consumer in terms of what they can spend in real terms? Or was it actually beneficial in terms of the savings that people have currently?
Well, I think I separate the fiscal stimulus from the monetary stimulus to start off with. And on the fiscal side, I think in the initial period of the pandemic, it was absolutely the right thing to do. I think the issue, to my mind, was that it probably went too far. The third round was excessive. That's where the problem started. And so it wasn't so much that it was the wrong thing to do in and of itself. It was the scale, I think, that was the issue.
You know, I want to look at the data here right now that Michael McKee was helping us with in the United States. And I think this is something very germane to a more longer-term view as well. For those of you on radio, we had a spike higher in the full faith and credit yields in America. And then as we heard from Michael McKee, who was speaking while everyone was acting, maybe not. And those yields have turned around and come in, and I think it'll be fascinating to see. Tell me how in long-term economics you use the short-termism of the bond market to try to guess where the long-term economics is going. How do you use the day-to-day, moment-to-moment fluctuations to observe the confidence of where we're going?
Well, I think it's really difficult, and I think what you've just described shows the danger of ascribing too much certainty, if you like, or too much importance to short-term moves in the markets, because they're up one minute and they're down the other. I think the shape of the curve is arguably more important than day-to-day.
What is the shape, the new flatness? What is
exactly, the flatness, whether it's flattening, whether it's steepening, whether it's going at the long end or the short end. I mean, what the market has told us over the last 3 months really is they think the Fed has got this now. The short ends come down, the long ends come down too, the curve starts to re-steepen. The recession risk is kind of being priced out a bit of the bond market. Inflation concerns are dissipating. I think the really interesting point is going to be, does inflation come down from 8 to 5 and 4? Almost certainly. Does it then get stuck, or does the Fed have to go again?
So just to sort of wrap it all up with your focus on Europe, saying it's such a different story here, speak to George Saravellis' claim that we're actually seeing more momentum in the Euro region than a lot of people expect, and that, frankly, he thinks that the fiscal spending will provide a tailwind that a lot of people discount. What's your view?
Well, I think there's some truth to the fact that the incoming data in the Eurozone have not been as bad as you might expect. We had the PMIs earlier this week. They held a bit better than we had anticipated and that many others had anticipated. But I come back to the fundamentals here, which is that Europe, unlike the US, is a huge net energy importer, and it's the prices of that energy that has skyrocketed over the past 12 months. The terms of trade have collapsed. That is manifesting itself in a huge squeeze on consumers, and there's not much that fiscal policy can do to offset that. We had a big package here in the UK yesterday. It only offsets about half of the squeeze in disposable incomes.
Quickly, get us here to Christian Malik, our interview of the day on hydrocarbons here in a moment with JP Morgan. What is your call on Brent crude 1 year out, and why?
I think it's going to stay elevated for the next 6 to 9 months. I think it might then start to diminish, but it's not going to collapse. I think it's going to come off a bit. There's going to be some demand destruction. I think we'll get a bit more.
Is $100 the new $60?
I think we're going to be, I would imagine 12 months out, somewhere between 90 and 100 is where we're going to be.
Interesting. Okay. Neil Shearing, thank you so much. Great to see you here. Neil Shearing of Capital Economics. He's helped us, Lisa, many times before, including New Year's Eve shows.
Well, that's
because he's the only one who shows up sober.
Well, honestly, I think that what he just was saying there was fascinating about the importation of a lot of the hydrocarbons in Europe. And again, this makes me wonder what the constraint is around the dollar weakening too much, because that will only jack up the prices more and create a real issue. It's a very complicated scenario, but the different outlooks for both Europe and the U.S. continues to be a theme.
I'm going to go to the back end of the GDP equation, and Neil Dudd of Renaissance Capital does that right now. I think we're looking at this holistically, and I'm looking at it as domestic, Y equals C plus I plus G, and then you got all the noise on the back end with net exports and imports. And Dutta observes, with his classic Dutta optimism, that it's about a resilient American economy and services being the key dynamic as we open up. We're completely focused on goods now.
Yeah, well, a lot of people would agree with him, although the services ISM that we got out recently was not very good, right? It came in disappointing. So there's all of these noisy numbers that are coming out and making it difficult to really know.
Bramo, way too optimistic this morning. We'll have to fix that next Tuesday.
It was the English breakfast.
Coming up, without question, our interview of the day on oil. Christian Malik of JP Morgan with their important research on resilient and higher oil prices. From London, Lisa Abramus and Tom King, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Boris Johnson pulled no punches when Bloomberg asked about the prospect of negotiating with Vladimir Putin. The British Prime Minister responded, "How can you deal with a crocodile when it's in the middle of eating your left leg?" Johnson said that the Russian president is completely not to be trusted. For the first time in 2 years, profits at Chinese industrial firms declined last month. Industrial profits fell 8.5% in April from a year ago. COVID outbreaks and lockdowns disrupted factory production, transport logistics, and sales. And it's a heartening development for the Federal Reserve, but maybe not for American workers. Staffing firms say that companies are now becoming more cautious after handing out hefty salary increases over the last year. Economists expect data to show annual wage growth this month was 5.2%, down from 5.5% in April. The Fed sees wage growth as a big source of inflation. And Texas Governor Greg Abbott reportedly has dropped plans to address the National Rifle Association's annual meeting in person today. The NRA is meeting in Houston just days after the school massacre in Uvalde, Texas. According to the Dallas Morning News, Abbott will be in Uvalde. He'll deliver a taped message to the NRA. Instead, former President Trump will deliver his speech in person. And movie theater owners in the U.S. hope the next movie, Top Gun Maverick, gives them a supersonic boost. The sequel to Tom Cruise's 1986 blockbuster is expected to bring in $130 million in its opening weekend. That would make it the third biggest box office opening since the start of the pandemic. Over the last 2 years, millions of consumers have gotten used to watching movies at home on streaming services. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city, Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I'm here at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think the Fed is going to have to decide between two policy mistakes. Hit the brakes too hard and risk a recession, or tap the brakes in a stop-go pattern, including pause in September would be an example of that, and risk having inflation well into 2023.
Our giant of game theory, Mohamed El-Erian, the University of Cambridge. Thrilled he could be with us this morning, except then, as I said earlier, he hung up on me because I care more about Christian Malik than I do Mohamed El-Erian. And I know Dr. El-Erian, in his very busy day at Cambridge, will listen in to these important words on your headache, my headache, everybody's headache globally. Global energy and oil. Christian Malik is global energy strategist at JP Morgan. Their London shop has dropped 100 pages on where we are going, and the vector is $150 a barrel somewhere out there. Christian, thrilled to have you join us.
It's great to be here live with you, Tom.
This morning. Christian, I want to talk about the complex microeconomics here. And we have lots of people looking at it. Ed Morris at Citigroup, the great Jeff Curry, microeconomist at Goldman Sachs. What's the distinction of JP Morgan research is everyone looks for a new energy regime?
Yeah, you sort of said it in the question, which is commodities. This is not about commodities. This is about oil and this is about molecules, energy molecules. How do we find jewels? Whatever form it is, whether it's clean, fossil fuel. And the issue with approaching it through a much more kind of holistic way is that when you start looking for jewels, effectively, or energy, we're quickly running short into a major deficit of energy.
Okay, I got to interrupt you because this is massive jargon. Folks, Jewels is not Boodles around the corner where you buy 2 carats out of guilt on your way back to New York. Jewels is Joules, and this is thermodynamics and the energy creation.
Exactly, not the crown jewels. Exactly, and I think on that point, when we then look for energy and look across all the fuels that we have, be it oil, gas, renewables, there lies the issue, that when you think about how to solve for that deficit, you've got to find energy that can also be used to produce chemicals, to produce tires for those Teslas. Equally, you're also trying to find energy for the EM world that doesn't have the infrastructure. And what that effectively means is that being short that energy, we seem to come back to fossil fuels.
Did you see how he got that jab in on Teslas? He got the tires.
Did I say that?
The tires are made of oil.
Well,
Elon, did you know that?
Everything. I mean, we even
Continue.
heard that from Bridgewater, that even the renewables, you have to get the stuff out of the ground first. Christian, why aren't oil prices higher, given your thesis?
Well, interestingly, when you sort of run through the deficits in all the different fuels, we're effectively fully loaded out, apart from oil. And oil, there is still spare capacity, but that spare capacity is quickly running dry. It's mainly in Saudi, mainly in OPEC. Now, it's a good question, and oil prices should be higher. If you think about the marginal cost to produce the oil, it's getting close to 100. Now, that's different to the 40 that you hear when you talk about it on the ground. And it's the difference between 40 and 100 is the price, the cash flow needed to feed the equity, the shareholders, now the social tax with windfall. All of these things are inflationary because you've got to pay all these things, feed all these mouths before you actually put an extra dollar into oil capex, and that's around 100. You then add on 20 to 30 in terms of what is this lack of spare capacity worth? Historically, it's been between $30 and $40. So, in other words, there is a lot of upside to energy prices from him.
So translate $125 a barrel into gasoline prices based on the refineries.
Yeah, I mean, our commodities team have done this work, and we're sort of heading towards $6 potentially by the second half.
In the United States.
Absolutely. So you're going to see this pass through in terms of retail prices, and therefore there's a question then: when does demand respond? How does demand respond? But the key here is that we have never been below 5% spare capacity globally in the world. And that equates to a much bigger premium for oil than what you'd expect it to be, given it doesn't cost that much to produce it. Yeah.
One of the huge supporters of what I've done is Daniel Yergin, and you and I had to read cover to cover the prize years ago. Folks, you bought the prize just to walk around campus and look cool. It didn't matter if you read it. Yeah. But the answer is, Yergin would say they hold the power of the prize. What is the power the Saudis hold, given the J.P. Morgan view?
Well, interestingly, I remember very well when we launched our bullish view in spring of 2020, and I remember speaking to OPEC and the Saudis, and they were still investing in the wells, so that when needed, they could switch them on. Now, I remember in the summer of 2020, why would we need those wells? Why did we have too much oil, demands of 75 million barrels? But they did the right thing. They were counter-cyclical. They continued to invest in their total capacity. Yeah. Here we are, 2 years later, and now we need those barrels, and the only one that's available to add those barrels, because they invested when everyone wasn't, are the Saudis. Yeah.
So if we get $6 a barrel, $6 a gallon gasoline, I'm just trying to wrap my head around this. Are we going to get demand destruction? Have we reached that point of demand destruction, or will it keep climbing?
Short answer, no. I think we can cope with those prices. In fact, I think we can cope with oil prices significantly higher over a period of time. And coming back to the Energy Outlook report that we did, one thing we discovered is the resilience of emerging markets to higher prices. Why? Because their bar is much lower. This is not about, do I cycle to work, do I drive to work? This is about living. And when you think about the in terms of sort of the conflict that they have, do we buy oil for $150 oil, or do we suffer the consequences, hunger, riots, revolutions, or whatever? So that is a much more difficult crossroad, and that's why we think the resilience will be much higher.
Jamie from New York emails in. He says, Christian, do you support the windfall profit tax?
Do I support it? I think ultimately, if it helps consumers, yes. But the problem is, all it's doing is creating new when they could have otherwise invested. And all that does is raise the break-evens. Remember all those mouths they have to feed. So whether it's the equity, the debt, the project, you've got another mouth to feed, which is additional taxes into UK Gov. So again, what's the oil price need to raise that capex in oil? It's just gone up significantly. That's inflationary for oil.
Christian Malik, thank you so much for joining us here in London today. He's with J.P. Morgan. As I've said before, we do always protect the copyright of all of our guests' research material. I urge you to go to J.P. Morgan and get your hands on their important 100 pages. You agree, you disagree with it, other people go the other way. It will make you more informed about these price economics. Are we done on TV?
We're done on TV. That was a week. It's a wrap.
You and I got through the week. I mean, we're not on speaking terms, but it's okay.
We're kind of speaking. We're next to each other on podia.
Podia. Yeah, well, they move, you know, it's like
yours moves.
Okay, coming up, David Weston will not go like.
Oh no, that noise. What is going on?
Back to another special Roland Garros update for Bloomberg TV and Radio from Tennis Channel. I'm Andrew Krasny. Iga Swiatek continues her incredible win streak on day 5 in Paris. Madison Keys also enjoyed a good day at the office. The American got past home favorite Caroline Garcia in 2 tight sets to move on. Up next for her, Elena Rybakina. Daily coverage starts at 5 a.m. Eastern. I'm Andrew Krasny.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
From New York City, for our viewers worldwide, we are in for Jonathan Ferro on this Friday. I'm Matt Miller.
And I'm Kriti Gupta. Green on the screen, potentially another rally. The countdown to the Open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Ferro.
We begin, as Pharaoh does every day, with the big issue, turning the page on another messy month for markets.
We've had a very significant correction.
We're embarking on is that bounce back.
That base for a rally later in the year.
Stocks are finding a little bit of stability here.
It doesn't mean that the economy is out of the woods.
We could see quite a bit more downside in equity.
We're closing in on somewhere near a near-term bottom here.
But I think we are set up here for a rally.
There's a lot of things that we can still look to do in markets.
In the long run, it's going to create some unbelievable opportunities down the road.
Opportunities emerging.
Recoup some of the losses.
Once earnings start coming down, we'd be buyers of this market.
What you get is a summertime bounce.
July, this summer, it's going to get more interesting.
Joining us now, Academy's Peter Cheer and Joanne Feeney of Advisors Capital Management. Welcome, welcome. Thanks so much for joining us. Joanne, let me start with you. Does it feel like we've come to a turning point here in terms of relative calm set in and investors ready to buy equities?
Well, good morning, Matt and Creedy. It could very well be. I think we should, continue to recognize, though, that there's an awful lot of real risks out there in the economy, and we're going to continue to look at earnings. And as we've seen, some companies doing better than expected and are getting rewarded for it, and others seeing the costs of higher transportation, wages, et cetera, really pinching on their margins and being really traded off on that. So I don't think we should expect less volatility going forward, but it could very well be the case that a lot of the recession risks and geopolitical risks are priced into the market, and there's now more of a recognition that growth is going to slow. So that does help, I think, help to create opportunity going forward. And we certainly have seen valuations come down in a lot of places, in some areas where we think it's just sold off quite a bit too much.
Peter, hop into this conversation. Joanne mentioned that key word, valuations. Is that what the market was really waiting for? The selling pressure to hit that proper spot to get back to those pre-pandemic valuations?
I think that's a big part of it. You've got these valuations, but I think we've also really been looking for signs that maybe the Fed can, take their foot off the brakes a little bit. It's whether it was the minutes the other day, somewhat slightly better inflation data this morning. You've seen the bond market really rally. Credit spreads have done phenomenally well. So I think that's kind of what we've been looking for. Is the Fed going to be able to follow through on all their threats, or are they going to have to back off? And I think they're going to have to back off a little bit, and that's creating this little bit of a base here.
Matt, I actually have a surprise terminal chart for you. We actually have a chart created by our David Inglis to talk about that growth story. I mean, we were talking about valuations, but I think it's
David
a growth
makes
story.
Brilliant charts.
We have to talk it. He does, but
Yes.
Take a look at this with a surprise reference. Tell me if you can find it here. The Treasury curve has uninverted.
How could I miss that? I don't know, Peter and Joanne, if you can see the screen, but basically the name of the chart is I Was Inverted. It's clearly a reference to Tom Cruise's answer to Kelly McGillis in the first Top Gun as to why or how they were so close to that MiG.
So you get it. So Joanne, let me come back to you. One, are you planning on watching Top Gun this weekend? That's an important question. And number two, if the Treasury curve is simply uninverted, is that also a signal that the rest of the market is following?
I think the Fed is doing exactly what it needs to do, and the market is recognizing that they have the tools to get it done. So it's clearly the case that long-term inflation expectations are well anchored. We're seeing the five-year break-evens down around 2.1, 2.2%, which is telling us that investors think that the Fed can get this job done and bring long-term inflations back down again. And we started to see some of that in the data this morning with the PCE and the core PCE dropping month over month. We're seeing some of those real pressure spikes in costs from used cars to other areas starting to come back down again. So, regardless of whether you can fly inverted like old Maverick, we do see some opportunity here for the Fed to keep getting this job done. And if it does, we may have, higher short-term rates. But if those inflationary expectations stay anchored, I think that's a positive turn for equity investing.
Well, and Joanne, I mean, the difficulty isn't bringing down inflation, right? The difficulty is doing that without causing a recession. Do you think that this economy is slowing down or possibly going to contract?
Well, Matt, when you look at the data, and as an economist, I can tell you we spent a lot of time on this at Advisors Capital, both top down and then bottom up, to see where these forces are going to play through. The data suggests the economy is still in expansion. We're not net importers of energy, so that doesn't hurt our economy as much as it does Europe. And what we're seeing is firms still trying to catch up to the really strong demand that remains out there. Those personal spending numbers this morning were encouraging. Firms may be hiring a little bit less. That could take some pressure off of wages, which is positive for the inflation story. But they still have to catch up. New cars production this year is going to be up. We're going to see more semiconductor chips coming online from new factories in the middle of the year. So we're still in expansion mode, although clearly slower. And that, I think, creates a pretty good foundation, again, for equity investing.
A very key time to change that narrative, especially when we talk about going from recession talk to perhaps the expansion narrative. I wonder if that's what stocks are reacting to. And speaking of, stocks seeing the largest inflows in 10 weeks, according to Bank of America. Strategists writing, quote, the summer rally bandwagon is growing. We fade rallies, but not in a rush. Let's bring in Abigail Doolittle for more. Abby.
Well, Creedy, we do have big inflows this week, as you were mentioning, the most in 10 weeks. But the story over the last, let's call it year, has really been the inflation story, the growth slowing story, but there is some relief. That could have something to do with the inflows. 5-year forward break-evens in general falling. In fact, that 5-year forward at the lowest since late 2019. This suggests the market finally seems to be accepting that maybe the Fed can get inflation under control. As a result, we have seen some risk-taking this week. First up week in 8 for the S&P 500, of course, and those stock funds, as you were mentioning, seeing the biggest inflows in 10 weeks, about $20 billion. Bonds saw a $5.8 billion outflow. The biggest inflow, though, cash at about $28 billion. So that still signals some investors are seeking safety. And as far as consumers, it's not clear how they're feeling about inflation, especially given rising gas on this Memorial Day weekend. But sector-wise, it seems okay. All 11 sectors this week for the S&P 500 are higher. Interestingly, led by some of those inflation-sensitive sectors, energy and financials and discretionary. So some mixed messages there, but overall, yes, definitely some risk-taking here. Perhaps we finally have a bear market rally underway.
Yeah, Abby, thank you so much. Peter, let's hop back into this conversation, Joanne, as well. But Peter, I want to come to you.
She called it a bear market rally.
She did call it a bear market rally. Well, let's go there. Peter, about a bear market rally. You said valuations might be part of the story. Joanne did as well. I'm curious what that means when we're still talking about the economy. Is the idea of going from a 2% growth clip to negative territory still on the table if you're an equity investor?
I think the risk is still there. It's all really going to come down to what the Fed does, how the war in Europe progresses, what kind of secondary effects we have from the supply chain. Can China get itself turned around and open up again? But having said that, we've hit these levels where I think there's reason to bounce. There's some good month-end flows that are driving some of this. I really like rotating, though. I think I've been very bullish energy all year. I'd start paring back on energy. I'd be looking at home builders. I'd be looking at financials. Some of the sectors that got most beat up, I think that's where the rotation is. I think there's heavy underweights there, and there's some real opportunity. I think the airline industry could benefit. So that's where I want to kind of shift my bets.
That's fascinating. Are you not concerned? I mean, I just keyed in on the home builders. Are you not concerned that we're in a tailspin here in terms of the housing market? I mean, we had some really disappointing data, and the affordability is getting out of control with mortgages above 5%. You still want home builders here?
Yeah, I think I want to start. One, they're down, somewhere close to 50%. So you've got a much better valuation entry point. And if the Fed starts realizing that they've got to be careful and not tap on the brakes quite as much as they've been talking about doing, and the economy starts, showing signs of energy price reduction, I think it's off to the races for those things because they're so underweight, so underinvested. People are so short them that's really, to me, where the opportunity is right now.
All right, I just want to quickly get back to Abigail Doolittle and ask about that comment. I mean, how do you know this is a bear market rally as opposed to, the last 18% was a drop in a bull market?
Because I would argue that if you take a look at a number of the indexes from the Russell 2000 to the Dow Transports, the NASDAQ 100, these indexes either are still in bear markets, the technical definition being down 20%, or are close to it. The S&P 500 briefly in a bear market last week, as you know. So you have this bounce. Think back to March. The NASDAQ 100 in 2 weeks bounced 16% and then had the worst month, I believe, since 2020, or maybe it was 2008 in the month of April. And we've had this brutal selling. In addition, this time period is really seems to be a blend to some degree between 2000 and 2003 and 2008. But 2000 to 2003, it was a long, slow move down. Everybody's looking for capitulation in terms of an end. It may be more similar to that time period where it's just a rolling bear market down. But there were very nice rallies in that bear market. Some people say bear market rallies are the best rallies. Let's see.
It's an interesting dynamic because that's exactly, or I think a similar dynamic that Evercore is actually warning about. They're actually warning investors not to get carried away with the rebound in markets this week, writing, quote, careful not to overdo the bounce of risk assets associated with optimism that the Fed rate path is more flexible than previously feared. And a September pause could even be on the cards. Joanne, let me come to you here. Is a September pause on the cards?
Well, you know, Kriti, the Fed is very data dependent. They're clearly going to be watching the PCE numbers, the wage numbers, personal spending. And so I think it's a little bit hard to predict when the Fed will find it to be the right time to pause, to, you know, put an end to some of these rate increases. And I don't think we really need to base our investments on that. You know, not investors, investors are not all the same, right? We have different types of folks at ACM, you know, growth investors, SMID investors, international, but the income investors that have come to us are actually doing quite well because a really high income oriented portfolio has been in energy, overweight massively, financials, real estate. Those areas of the market, to Abby's point, some areas are really down hard, but some areas of the market are doing just fine. So I don't think we need to really put our investment strategy in the hands of the Fed. We need to recognize that they're going to have to get this inflation under control, and they're going to do what it takes. But in the meantime, that steep drop in valuations we saw, particularly in the growth area, I think does create an opportunity for those investors that have more of a long-term view. Could still be volatile. It will move around depending on the Fed signaling. But ultimately, long-term, we're still in somewhat of an expansion, and we've had a big shift out of these growth areas, which have multi-year drivers to their end markets and to their profits. And at some point, investors are going to want to put that stuff back in their portfolio.
We're certainly going to keep an eye on that. Peter Cheer, Joanne Feeney, they are sticking with us. Joining us now, though, with a look at the stocks moving ahead of the opening bell. Here's Ed Ludlow. Ed.
Yeah, good morning. Happy Friday. Let's start with the technology sector and take a look at Dell. This is about offices reopening and healthy spend on that corporate PC and business infrastructure. You see that stock up 10% in pre-market. Marvel, a chip maker, good, strong outlook, up 4% in pre-market. Zscaler up 7%. Workday, interesting, cloud-based enterprise software provider, up around, or down, I should say, 8%. The concern from analysts is that deals shifted out of the quarter, the macro picture's worsening, and there's concern that there might be some pullback from the enterprise software perspective. Let's move to the retail story where there is a lot of red on that screen. You look at Gap, down 16%. We thought the worst had come because they'd already downgraded their outlook for the year. Poor management of inventory, particularly at some of their bigger names, brands. Big Lots, again, discount retailers struggling to handle inflation. A surprise loss for that company in the quarter. But there's an exception to the rule, guys. Spending on makeup. Look at Ulta Beauty, up 8% in the quarter. They're saying that people are getting back out there. They're spending money on beauty products. I think we're getting geared up for a nice summer outdoors, guys.
Yeah, I need a little bit of a touch-up. Ed Ludlow, thanks very much for that. Ed, giving us a look at some of the stocks moving ahead of the market open. Coming up, the Biden administration unveiling its strategy towards China.
We stand ready to increase our direct communication with Beijing across a full range of issues. And we hope that that can happen.
That conversation coming up next. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade.
About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We are not looking for conflict or a new Cold War. To the contrary, we're determined to avoid both. But we will defend and strengthen the international law, agreements, principles, and institutions that maintain peace and security, protect the rights of individuals and sovereign nations, and make it possible for all countries, including the United States and China, to coexist and cooperate.
Secretary Blinken calling China a serious long-term challenge to the international order. China responds with a spokesman for the embassy saying, quote, "It's never China's goal to surpass or replace the U.S. History and reality show both countries stand to gain from cooperation and lose from confrontation." That's so nice. Joining us now, Bloomberg's Anne-Marie Hordern from Washington, D.C. So, Anne-Marie, is this really heating up? I mean, Biden just a couple of days ago said that the U.S. would intervene militarily if China attacked Taiwan.
Well, that was a big question going into Secretary of State Antony Blinken's speech yesterday, and he said that the U.S. has for decades and will continue to abide by the one China policy. They said that this has not changed. He also said, "We do not support an independent Taiwan." That was the quote. So he kind of put to bed those questions, given the fact that the president said yes when he was asked if the U.S. would intervene if China were to attack Taiwan. But this speech, this long-awaited speech that we got from the Secretary of State, what many are saying that are familiar with the matter, that this really mirrors what the administration is doing and their classified China policy behind the scenes. But there wasn't anything too earth-shattering, but there was very frank statement towards Xi Jinping himself. And one quote that I want to bring to your attention was he said, "Under President Xi, the ruling Chinese Communist Party has become more repressive at home and more aggressive abroad." So there was some quite frank discussions against Xi himself. When it comes to the policy, it was really about how the United States views how they're going to compete with China, maybe contain China, and it really was about shaping the world around Beijing. And they want to do that by investing at home, bolstering their allies, most notably in the Indo-Pacific, and then, of course, competing with China when they can, economically and militarily.
Anne-Marie Hordern, our Washington correspondent, joining us from D.C. Thank you, as always. Peter Cheer, Joanne Feeney, they are still with us. We talked about the valuation side of it. We talked about the growth side of it. Let's talk about the supply chain side of it. This issue that Anne-Marie just talked about, essentially making Beijing the center, at least from the Chinese perspective. That's interesting given the ripple effects you're seeing throughout the entire world. You heard it from Gap, you heard it from Costco, you heard it from NVIDIA. COVID lockdowns are getting in the way when it comes to Shanghai, when it comes to Beijing, and getting those exports out. How much of a risk is that in the near term? Peter.
Perfect. So I think the supply chain issue has been going on for years, right? Even before COVID, we saw a lot of U.S. companies, I think, frustrated with their business experience in China, whether there was more IP theft than they hoped for or thought they would see. The business opportunities never developed. Then I think we saw during COVID, supply chains disrupted. And now since the invasion of Russia into Ukraine, I think more and more people are aware, like, wow, we've got to be very careful in what our supply chains look for. And so I think companies are viewing things much more a security sort of lens standpoint. How secure are my supply chains? How robust are they? Do we have redundancies built in? And I think that's what's going to shift the global economy for the next few years is a realignment of where you get suppliers. I think it's going to be huge for Mexico. I think more and more U.S. companies are going to say, we want to build things here. We want to build things in Canada. We want to build things in Mexico and South America and move away from that region where we have far, far less control.
But Peter, it would take a long time and be almost impossible to unravel global supply chains from China. I always ask the big car makers when I talk to them about this, what will you do if the U.S. gets into real conflict with China? And there is nothing they can do. It doesn't seem like the markets are reacting at all to this geopolitical tensions between the U.S. and China, or any more to Russia and Ukraine.
Right. I think a lot of it's kind of settled into the status quo. I think you're seeing some of this progress being made. I do agree. This is a 2 to 5 year sort of project where we move things around, we shift supply chains, and that will ultimately be good for the economy, right? We're going to have more jobs, better jobs, more secure supply chains. The hindsight of this, or one of the issues with this, is it's going to hurt Taiwan over time, right? You're already seeing semiconductor plants being announced here. You're seeing them announced in Germany. So some of the stranglehold Taiwan has on semiconductors, which is something that makes it very important, will dissipate over time. So there's all these interactions. So I think China's going to continue to put economic pressure on Taiwan. You're going to see changes that way. Ultimately, we're going to have a very different looking economy. You're going to have China mostly aligned with autocratic nations, big commodity suppliers, and you're going to see the U.S. trying to align with countries that we view are close to us. And by close, it's either morally, politically,
or Saudi Arabia.
Proximity. So I think that's one of the ones right now that's a big issue, right? I think China is pressing Saudi Arabia to do more and more business with China. They are pointing out what the U.S. government did to the Russian central bank's holdings of U.S. dollars, right? We basically weaponized dollars. So if you're a country like Saudi Arabia, you might be very cautious to hold so much of your assets in treasuries. You want to do business. And on top of that, on the energy side, we sit there every day saying we want less energy, we want less energy. China's fine with energy, right? China is going to be buying fossil fuels for 30, 40, 50 years to come. So I think that's part of that realignment.
Joanne, let me get your take on this, bringing you to the conversation. Peter makes some very strong points when it comes to simply nearshoring, but I have to ask about simply perhaps bringing production not into Latin America, but bringing it actually back into the United States. Has been a major part of the Biden agenda here, is to bring, say, semiconductor manufacturing capacity back into states like Arizona, like Texas, for example.
It was supposed to be part of the Trump agenda as well, right?
It's supposed to be part of the Trump agenda as well. Joanne, I have to ask you, that's a long-term project, but does that motivate more capital flows from abroad into the United States as well when it comes to the markets?
I don't think we're going to see as much deglobalization as Peter suggests. I think, first of all, the incentives are pretty strong, and the installed base of technology around the world, I think, is just going to grow. What we are seeing from companies, though, is a move towards precautionary inventory stocks, right? So being a little bit less, on time everything, and so that they can ride out any volatility. China has a strong incentive to maintain its connection with the global economy. And I guess I don't see China moving, away from that integration as much as some others might. The incentives are simply too strong. And while, Taiwan Semi certainly has been a dominant player, Samsung is also a big player. And, clearly we're seeing Intel move into the foundry business with that, operation now opening up in Ohio at some point with government subsidy from the U.S. So we're seeing some diversification. I think that is a positive thing. We're seeing some move out of China into Vietnam and other areas in Asia, which I think is positive. Diversify those risks, no question. And I think, by the way, that move to build precautionary inventories against some of those risks is a positive one for GDP growth. It's another reason why we're going to see growth continue. So, overall, I think we should expect to see, continue to see an internationally diversified supply chain, a little bit more onshoring here in the U.S., but ultimately a still resilient globalization.
Joanne, great to get your take. Thanks so much for joining us. Joanne Feeney there from Advisors Capital Management. Peter Cheer, always good to talk to you as well from Academy. Coming up, the morning calls, and then later, J.P. Morgan's Jack Caffrey reveals his outlook for markets this summer following another volatile month. That conversation still ahead. This is Bloomberg.
falling energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Morning calls. Look at some of the analyst recommendations on Wall Street this morning. First up, Morgan Stanley upgrading Macy's to equal weight. The analysts highlighting the retailer's upbeat results. You do see those shares actually down 1% in reaction. Next up, Pivotal Research upgrading Roku to hold, macroeconomic issues, valuations that hitting it. And lastly, Credit Suisse downgrading Citigroup to neutral. The analysts expecting earnings visibility to remain compromised by higher spending. The opening bell's next. This is Bloomberg.
And behind me, you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to The Close. We could put an end to The Close It's the Open. I have been here for a long time. We could put an end to the longest losing streak, weekly losing streak, since 2001. We've had 7 weeks in a row of losses for S&P and Dow Jones Industrial Average. We're looking at the possibility of an 8th week up here. So euro dollar not doing a heck of a lot, stuck at 107 as it has been for a couple of weeks. The 10-year yield at 272, now going back down. It came up a little bit yesterday, but remember on Monday it was at 286. NYMEX crude coming down a little bit. It was at almost 115 earlier this morning, now 113.64. So, you know, other than stocks, there's really not a heck of a lot to talk about in these markets. Maybe we just need to finish the month of May and start going bonkers this summer. Joining us now with some breaking news from Normal, Indiana. Is it Indiana or Illinois? I always forget. Indiana?
It's Illinois. It's Illinois and it's Rivian.
Normal, Illinois. Here's Ed Ludlow. He's actually in San Fran, but Ed, we're talking about Rivian. What's the story?
Yeah, we're across the country. Some headlines crossing the Bloomberg. According to a memo obtained by Bloomberg, Rivian has basically reshuffled, reorganized its management team to, quote, keep pace with their growth plans. This is a stock that's really been under pressure year to date, right? It hasn't lived up to the expectations in terms of ramping its EV production of a battery electric pickup, the R1T and R1S SUV. It's also making battery electric delivery vans for Amazon. Charlie Mwangi, who is a former Tesla executive and was executive vice president of manufacturing for Rivian, is departing the company as part of that reorg. And another one I thought that was interesting is that Forrest Young, who's the head of brand, is now kind of directly reporting its CEO, RJ Scaringe, which is interesting because Rivian's kind of reputation took a hit, you'll remember, early in the year when they had to do a U-turn on raising prices, which upset some existing customers. So changes of that company, the stock kind of reacting in pre-market. And at the open, we're up around 4%. Some other movers I'm watching, why don't we pivot to the technology sector and look at Dell. Dell higher, as we look at it, around 18%. This is amazing. There's always an exception to the rule in the market, right? When we're worried about consumer confidence, inflation, supply chains, Dell proving that they're strong. Business spending on PCs and tech infrastructure strong. Retail sector, the opposite story. Look at Gap and Big Lots, both down more than 10%. Gap's problem managing inventory. They did not do well in the quarter, having already revised their guidance once earlier in the year. They revised it again. Big Lots, the discounter, recording a surprise loss, struggling to manage the cost of inflation and whether to pass on to the consumer. And finally, Didi, interesting, Chinese ride hailer, up 9% in early trading. A Bloomberg scoop, according to sources, the Chinese-backed automaker FAW taking a stake in the company.
Ed Ludlow, thank you as always. After outperforming throughout most of the year, value's day in the sun, well, it might be finally coming to an end. That's the view, at least from Bank of America and Credit Suisse, both downgrading value stocks thanks to peaking bond yields and slowing economic growth. Bloomberg's Abigail Doolittle is joining us now with more. Abby.
Well, it's also the informal view of Nomura. Yesterday, I interviewed Matt Rao of Nomura on Options Insight, and he was talking about how this is certainly the end of the high growth beta trade into that value trade that everybody's talking about. But this expectation's been here for a while. It's taken a while to develop. In fact, back in 2020, the expectation was big after the pandemic rally. So there was a pullback for not only growth relative to value, but also, get this, the Bloomberg US Pure Growth Portfolio. I mean, if that's not growth, but we're looking at that there in blue, and then back higher into the beginning of this year, and now you can see a big nosedive lower and probably likely to go down. Now, Morgan Stanley's Mike Wilson, of course, has been having another career-making year. He's been talking about this long, slow bear market's really been playing out. Not surprisingly, then, the firm is also supporting that move toward value, saying that there's a new era of strength. Plus, they're citing QT, and this is interesting, a discount on value stocks not explained by fundamentals. In fact, value right now trading at almost 16 times a forward PE versus growth at almost 21 times. You wouldn't think, given the fact that we've had growth coming in so much, that it could still be more expensive. But it's important to remember that a falling tide takes down all boats. And plus, if value started out at a lower level, it could take some time. But if the weakness continues, Matt, you could see a crossover where value will truly be outperforming.
All right, Abby, thanks very much for that. Let's ask somebody who puts his money where his mouth is. JP Morgan's Jack Caffrey joins us. He's a portfolio manager at JP Morgan Asset Management. Jack, what do you think? I mean, we've been talking about this possible rotation for as long as I can remember now, and it just hasn't come to fruition. Is now the time?
Well, I think when we call stocks value stocks, we almost mislabel them. And I think really they are cyclical stocks. And so to the extent we are seeing some natural slowing in the economy and economic growth, I actually think value might suffer a little bit more in the shorter term. And if investors do become a little bit more confident in that stabilization and growth, can you actually see some rotation back to growth stocks? The more secular names, where in this case, expectations have been marked down much more dramatically than you've seen in value. Value's also benefited though, because energy is a big part of value. And to the extent oil prices are up 100+% year to date, you've actually made some large part of value cheaper just because of the inflation problem energy's been causing us.
I am so glad you went to value here, because value, I think, comes to your point with so many definitions. You can look at it from a capital expenditure point of view, where you find the industrials, the energy stocks. You can also look at it from, say, a cyclicality point, as you said. But I'm curious if value is also, say, your bellwether. And if it's your bellwether, is Apple, is Microsoft perhaps the new value? Is Apple or Microsoft the Coca-Cola that once used to be the value stock?
I think they are sort of I think names like Apple, like Microsoft, like Meta, Meta might be becoming value at this point with the amount it's been marked down. Those are growth, and I think that's one of the challenges this market has had, is that the new four horsemen, if you will, of the stay-at-home, work-at-home segment had become 25% of the market. And so when those stocks don't work, almost definitionally the market won't work just because of the way it's weighted. That's created opportunities. A year ago, energy was 1.9% of the S&P. Today it's 5%. That's, if you, not really a stealth bull market within the rally in energy, but it doesn't take a lot of money leaving former leaders to actually make some things that have been left behind, whether they are cyclical or not, to actually start working. And so you've seen some of that going on.
We've seen massive markdowns, by the way. I mean, some of the names that both of you are talking about, I was just reading Brad Stone's Big Take piece, which is awesome, by the way.
Yeah.
He points out Amazon down 36%, Tesla down 38%, Meta down 45%, Zoom down 44%. That's all year to date, and Bitcoin, of course, down 48% as well. So it's pretty amazing the markdowns we've already seen.
Yeah, and to your point, and to both of your point, actually, you made essentially the idea that if you're not confident on tech, you're not confident on the benchmark from a purely mathematical weighting point of view. But I have to ask, some of these names, the sector, I should say, is the fastest growing sector in the S&P 500 right now, and yet it's being, I want to say, punished when you look at the latest stock moves.
Right, but there's always the intersection between what can you deliver versus what I think you can deliver. And to some extent, you have certainly seen better delivery out of the more cyclical names over the past year. That becomes harder with a lapping of stimulus. That becomes harder when the consumer is forced to decide, do I buy a new couch? I don't need one, I've already got one. Or do I fill up my gas tank? And when you start going, I was in upstate New York over the weekend, $100 to fill up a gas tank. That hurts. That's a tax increase on the consumer. And it's I won't say it's forced consumption, but it's forced consumption if you want to get around. And so to some extent, portfolio management.
Eating certainly is.
Not for me. But that would just be what my doctor would tell me.
Well, let's talk about liquidity then, because that's the other component of it. I feel like a lot of these tech names, at least in peak pandemic in 2020, were rallying, or even I would argue airlines or cruise lines were rallying because of the amount of cash they were able to get on their balance sheet. Now the cash is probably eroding or being used for M&A. What happens to the liquidity picture?
Well, I think the liquidity picture over the last year has been accelerated. I'm not an expert on market fundamentals and plumbing, but I do think we have had some double counting when we start talking about liquidity. Because if you go out and you buy an ETF, the creation agent for that goes out and then has to go buy the stocks underpinning that. And so to some extent we say we're seeing 12, 13 billion shares trading. 40% of that is ETF. Some large amount of that 40% of ETF volume is also turning into equity volume. So I do think that there are some challenges when you start moving individual stocks around from a liquidity perspective. I also think over the past month and a half in particular, we've seen a bit of a plumbing problem because we've actually created a market over the last 20 odd years that's been one way in nature. You don't have anyone who's trained to be a contrarian, And I would say, to some extent, that's where we started this conversation. You know, value investors are typically contrarian investors, and they're maybe not happy to be early, but they're willing to accept they're going to be early. The amount of pain value investors were taking from March of 2020 till, call it December of this year, you know, put a lot of people out of business. And so there is no one who really wants to say, I want to buy that thing down. You know, when we talk, Matt's comments, you've got names down 38, 40%. The S&P went down 45% in 08, 09. You know, we were talking about the world ending. We aren't talking about the world ending when we look at some of these declines, and you've declined all the way to 30 times earnings. Like, that doesn't seem cheap. That embeds a lot of, you really have to grow for a long time. You really have to generate a lot of cash. And since I'm a dividend growth manager, I'd actually like you to be returning that cash to me and let me make some of those reinvestment decisions rather than you keeping it all for yourself to decide what to do.
By the way, we are talking about the Fed going from 0 to 250 or 0 to 300 in a year, right? And for people who've been through big hiking cycles in the past, you and I are probably the only ones.
You are calling me out for being old. That's okay.
That's not so much, but
he does it all the time.
I just wonder, the old guys always say, don't fight the Fed, right? This is what I hear from Paul Sweeney, who has a 30, 40-year banking career. Is it okay if you price in the Fed? Can you then move on?
Well, I think you have to respect the Fed because they kind of control the rules of the game. They control the liquidity. I also would say, you know, look at how we responded this week. They've been telling us in speeches that they're not going to move 75. And now they write, we're not moving 75, and suddenly that is the good news. Like, well, they've been telling you what they're going to do for some time.
Well, a lot of people took the minutes as dovish because they essentially
they
said,
confirmed what they've been telling you.
Well, but also, if we raise enough now, we can cut more later.
Yeah, but if we raise enough now, then we've actually made earnings estimates at risk. So I should be buying stocks on the fact that you're telling me you're going to create more risk in the fundamentals. And so we come back to this interplay: fear, greed, psychology, and, you know, fundamentals. You know, down 7 weeks, at some point you're going to say, I'm tired of selling.
All right, Jack, you don't seem old to me. You look experienced. You're experienced.
That's makeup.
You have a look of wisdom about you. Jack Caffrey, thanks very much for joining us from JP Morgan Asset Management. Now, stocks are, it looks like, bouncing back this week, at least so far. Not as pretty for crypto, however. Bitcoin facing an 8th week of declines. That would be its worst run since 2011, which for Bitcoin is like its entire life, pretty much. Ed Ludlow rejoins us with more. Ed?
Yeah, it's interesting because we've been talking a lot about like the high correlation between Bitcoin and stocks, the S&P 500 or the tech-heavy NASDAQ 100. But ultimately, Bitcoin's been kind of trading sideways, treading water around $29,000 per token. It's been under this streak, right? I think we have a beautiful Bloomberg Terminal chart we're about to show you that in the weekly losses context, things look pretty ugly for Bitcoin, right? That's a lot of red on the screen. And while equities have broken out, albeit temporarily, from this weekly pain, Bitcoin's not been able to. That said, there is some nuance on it. Bitcoin's been kind of behaving like the haven asset within the crypto space. You look at some of the altcoins, for example, I'm talking about Avalanche, Polkadot, Solana, all these names that, Matt, you love. They've been suffering because of the sell-off, the pain associated with Terra, the Terra block, the Terra USD token, and its sister token Luna. So while we have seen really big declines this week in those altcoins and some of the ETFs linked to those and crypto-related stocks, yes, Bitcoin's got that horrible weekly run, but it's kind of held steady at that $29,000 per token mark.
All right, Ed Ludlow, thanks very much for joining us. You're 100% right that I love the name Polkadot. I just don't actually know what the coin does. Coming up, investors keeping an eye on the supply side amid lingering recession concerns.
It would be wonderful, for example, to also have labor force participation go up, especially among women. That would help. It would be wonderful to have supply chains improving. That would help. Is all that going to happen in the short term? Very unlikely.
We're looking ahead to next week's key economic reports. That conversation next. This is Bloomberg.
for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
The key issue is whether we get a surge in productivity, and you can get that with all sorts of things happening underneath. It would be wonderful, for example, to also have labor force participation go up, especially among women. That would help. It would be wonderful to have supply chains improving. That would help. Is all that going to happen in the short term? Very unlikely.
A host of U.S. economic data on the docket next week, including the U.S. payrolls report. Bloomberg's Mike McKee joins us now for more. Mike.
And including productivity that Mohammed is looking for. We're looking for productivity to not really change, be down for the quarter. It's just a revision. But we do have a lot of numbers coming up this week that bear on prices, and prices are important right now because everybody's watching the Fed. We got a little bit of good news today with the PCE indexes, but we've got home prices, we've got manufacturing prices, we've got auto sales, which will reflect prices, and then payrolls. And everybody's going to be looking at average hourly earnings to see how we are doing there. Payrolls Friday, the big numbers, of course. Change in payrolls, 325,000 is the forecast. That'll get adjusted between now and next Friday. But the thing about it is it's a slowing in the trend. That would have been a lot 2 years ago. But now after the pandemic, we've been in the many hundred thousands range, and that's a slowdown. Unemployment's supposed to tick down again. We'll wait for that to level off. And then, of course, you've got your average hourly earnings supposed to tick down again, and the participation rate expected to go up. Now, one interesting thing that follows from today's numbers and the other inflation numbers that I wanted to point out to you guys is it's too early to say that we have gone a long way towards the Fed's goal, but the markets have. Take a look at this. That's the yield curve on top. That's the white line. The blue line is the yield curve on September 22nd, when the Fed first mentioned the idea of speeding up tapering and bringing forward its rate increases. And the red, that is the area which the Fed defines, 2 to 2.5% as neutral. So the market has already put us above the Fed. You're paying the kind of rates you would pay at a terminal level. So it'll be interesting to see if perhaps the kind of markets we have these days with instantaneous information speed up the transmission process. Those long and variable lags might become shorter and a little bit less variable.
Well, we did see mortgage rates come down, right? Last week they were at 5.25 to 5.27, and this week they're at 5.10. So
yeah, banking people are saying that is a question of supply and demand market forces, because people aren't taking out mortgages. So to get people more interested, the banks had to lower rates.
Down a little bit. Mike, thanks so much. Michael McKee there with a look at all the eco data that we've seen. Oil prices lingering well below the peak. They still really feel high, though. All signs pointing to a red-hot summer that will get the market rallying again. Bloomberg's Abigail Doolittle is back with us for more. Abigail?
Well, Matt, it's interesting because we do have oil off the peak, but not so much at this point. It's super interesting only because the move higher in oil earlier this year, it was parabolic in nature. It was straight up. Typically, you'll see that reverse straight back down. That has not been the case for oil. After going to close to $130 per barrel, it then went close to 90, but then has really been buffered in this trading range as traders bet that it is a stable market. And right now, looking at that 1-year chart, that 6-month chart, it appears to be a stable chart or stable market. It's a very nice uptrend. Now, some of this probably, of course, has to do with the fundamentals. One piece of that, OPEC, about a 1/3 producer of the world's oil, they produce about 28 million barrels per day. Their spare capacity right now is about 5 million barrels, so not the biggest buffer. That could be one reason to think that oil is stabilizing here, especially as we go into the summer driving season. Now, when we talk about high oil in the winter, we're of course thinking about heating costs, but in the summer, especially going into the Memorial Day weekend, we're thinking about high gas prices. Well, right now, gas is at about $4.60 per gallon, according to AAA. That is almost 40 minutes of work, Creedy, at the federal minimum wage, the highest since 2008. Not the best ratio, and it appears that it could keep going higher. So maybe there is reason to think that peak oil, at least right now, that maybe it's ahead.
Abigail Doolittle, thank you so much. Matt, she just showed my chart of the day. That was so cool.
Was that your COTD?
That was my COTD. Abigail Doolittle did it, and now I'm extremely flattered. Of course, Dan Curtis helped with it. It was really his idea, but, you know, a team effort over here at Bloomberg. But a key point going into the summer driving season.
Yeah, and I will say that you may know I just ordered a 6.2-liter V8 from General Motors.
You've mentioned it once or twice.
Yeah, so the good news is, the bad news is I'm gonna get like 14, 15 miles per gallon if I drive conservatively. The good news is it only has a 23-gallon tank. So it's only gonna cost me like $130, $140 to fill up.
But I wonder how many of the average American drivers can do that, especially when you see some of these gas prices really hitting the lower income more than they're hitting, of course,
it's
the more
becoming,
insulated.
I think, very expensive for people to do. I've just come from Berlin, where gas always costs this much.
Sure.
So to me, it was a discount when I first got here, and now we're getting to normal prices. But for most people, maybe time to think about buying a hybrid or
Lucky you.
an electric car. Coming up, the market-moving events that you need to be watching. That's next in our Trading Diary. This is Bloomberg. 25 minutes into the session, time for your trading diary right now. We're seeing gains on the S&P 500. You can see there, 1.5% going into the weekend. Will it hold is the question, because it's a long weekend, obviously, and a lot of times investors like to get flat. In terms of the trading diary, the UMich Consumer Sentiment Survey coming out at the top of the hour, so watch for that. Very important as we focus on retailers this week. Looking ahead to next week, Fed speak from Fed Governor Waller on Memorial Day, so if you're not on the beach and relatively sober, definitely tune in. Bullard and Williams on deck for Wednesday, initial jobless claims on Thursday, and rounding out the week with the U.S. May payrolls. That was our countdown to the open. Critty, it's been a pleasure working with you.
A pleasure, Dream Team.
John Farrow, the real Dream Team, will be back next week. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the term to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi-Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their $1 million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145. and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complications due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as the coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack at the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker, but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Benegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares, with all